Good morning, guys. Let's start. So, yesterday, where were we exactly? I mean, this is a property, plant, and equipment. We have revalued this, correct? No? Yes. Revaluation, there is a gain. Revaluation gain also is an income because it satisfies our definition. It is increasing our asset, correct? No? And it is increasing our equity. So, maybe either increasing asset or decreasing the liability, ultimately increasing the equity. Either this increase or this decrease, ultimately equity should go up. Then it is called income. Correct. Every income not necessarily go to P&L. Right. That will be decided by the respective standard. Indians will tell. Revaluation gain is also an income. But standard told very clearly, no, shouldn't take it to P&L. You have to take it to revaluation reserve. That's why we will take it to revaluation reserve. But this directly goes to revaluation reserve. Correct. If you pass an entry, PPE account debit to revaluation reserve will record. Correct. No? So what is happening? In the balance sheet movement is happening. Correct. No? Balance sheet movement is going up by property, plant and equipment and revaluation reserve goes up. How do we know what is the income? Which is not recognized in P&L, I agree with you. But let's show that in separate statement. That place is what? Other comprehensive income statement. Okay. So that is what we saw, right? Yes, it is unrealized income. It is not routed through profit and loss statement. Hence, it is presented under OCI. Next question. Like, sir, is it like all unrealized incomes will go to OCI? No, no, wrong. Can you make a note? I think you noted till this level, no? Exactly. Right, right below, next to this, all unrealized incomes will not go to OCI. All unrealized incomes, all unrealized income will not be routed through OCI. Full stop. It is an exhaustive list. It is an exhaustive list. It is an exhaustive list. Exhaustive means what? Exhaustive means this four means four. That's all. It's not inclusive. Inclusive, exclusive, you call, right? Inclusive definition of income tax mean it includes when the right sentence means not only this, anything they can bring it. Exhaustive means 1, 2, 3, 4, 5. If I tell only that five, no other items will come in. Are you getting my point? If there is exhaustive, that's it. Whatever we are going to discuss, not now. Now you will not understand because it is linked to so many other big standards. You just started yesterday, correct? Na? Right. I'll tell some two such items I'll discuss. Right. You understand first what happens, how it moves. That is more important to you. Fine. Exhaustive list. Exhaustive list means limited. Five items means five items. Sixth item can I incorporate? No, no. You and me cannot incorporate. It has to be told by the standard. It has to be told by the standard. I mean, 3 days before I told you, no, I had a session at PAG, CNDG. CNDG, the directors level of CNDG, senior officers, IA and AS, which is equivalent to IAS for them. Okay. So those people were there in the training. So whenever I say some, I mean, this is like, whenever I say, where should I do, where should I transfer, where should I show this? They'll simply tell OCI. Hey, OCI is a dustbin icon. Wherever you don't know, you don't want, you will put it there. No, it is not like you cannot transfer everything which you don't know. I'll transfer it to OCI. No, OCI is only exhaustive. When I give a list of 8, 9 items, no, only those 8, 9 items will come. Sir, mine is 10th item, sir. 10th item will go to P&L, sir. That's all. Is it clear? If it is not there in the list of OCI, it has to go to P&L. This much you remember. Okay. By mistake also don't write in. Whenever you don't know, na, like them, wherever you don't know, then put OCI. No, ऐसा नहीं होता. You will be caught very easily. Got it? Right. Chalo. So this is first point. So as we said, like this is the statement of profit and loss, my dear. Profit and loss, including always OCI. Outside India, I mean IFRS में, in IFRS you have a choice. What is choice? I can show only statement of P&L in one page. statement of other comprehensive income in another page, like statement of cash flow, how you show, like that you can show two statements you can show. Are you getting my point? Right. But in India, we have taken a carve out. What is carve out means? We don't want to show like this. I mean, ICA has not given a permission to show that. So all the companies has to show first P&L, immediately next OCA has to come. Are you getting my point? Sir, OCA में कुछ point in OCA I don't have any points only, sir. Still correct. There will be one point for sure, which actuarial gain or loss. Have you heard this word? Actuarial gain or loss. Are you done with AS15 in the Inter? If you have done, then you must have heard. But it's okay. That was not a focused point. It will be focused in Ind AS because it will be showed separately. When we do Ind AS 19, that is equivalent to accounting standard 15, I'll tell you. Okay. So every company will have employees. Correct. So when you have employees, gratuity will be required. When gratuity is required, actuarial valuation is required. So actually, when he is doing, he will get you some number, actuarial gain or loss. Like that, he will find some number. That number we have to show separately. Anyhow, that is just forget about it right now. Okay, because you don't know. I can also teach. I cannot teach right now too much. Correct, no? Right. So this is first number I told you, Pat. This, yes. This what is this? What is this? This is where we stopped approximately. Correct, no? Yes. Chalo. So let's go to the like other comprehensive incomes in the other comprehensive income statement. Correct. So the first point is what, madam? Items that will not be reclassified to P&L. What do you mean by this? Anything that comes to your mind when you read this line? Plain line. That will not be reclassified to P&L. In the future also. Today it is going to OCI. What did I say? Today it is going to OCI. In the future, it will never come to profit and loss statement. But it will be changed within the balance sheet. Balance sheet in the sense statement of changes in equity. SOCIE. In SOCIE, we will change it. How? Correct. Na? Right. I'll teach you. I'll give an example. You see that you will understand it 100%. Okay. I'll ensure you in 10 minutes, you will get everything. Done. Next. And whatever the item you write it here, related to that income tax impact. Income tax does not mean only tax payable, deferred tax also. Current tax plus deferred tax. Both. This is the tax, income tax related to those items. Agree? Right. If you observe carefully, when I say profit and loss statement, correct, na? Right. Profit and loss statement, I will say revenue plus other income. Say example 1000, you got it. 1000 CR. Right. Then we'll say all expenses, correct, na? All expenses, including your cost of goods sold, right? Plus employee benefits, finance costs, depreciation, other expenses, everything you cut it. Say example, some 600 rupees I have cut. So this is 400. The 400 is called profit before tax. Agree? Yeah, for this profit before tax, then you will say tax expense. Do you record like this? Yes, tax expense. Under the tax expense, what will come? CT. CT stands for current tax. Current tax means which is payable right now. Which is right now payable. Are you getting my point? It's a provision for tax. Current tax means provision for tax. Agree? Right. Then what will come next? Deferred tax will. Getting my point? Right. So say example 30%, so 120 something like that. Just I'm taking rough number. Okay. Right. So then this is going to 280, which is my PAT. So far clear? As part of Ind AS, what will happen? OCI will come. OCI may, if I say now some number, just revaluation gain 100 rupees I am keeping here. Correct. On 100 rupees, current tax will not come. Just because you revalued, you will not pay tax to government. Agree or not? Just you revalued, government will consider it. Will they give depreciation on that? Yeah. No, they will not give depreciation also. Are you getting my point? That's why will not pay that money and it is not tax payable. So current tax will not come. But will the deferred tax will come? Yes, deferred tax will come. Are you getting my point? So that's why the on this 100, 30 will come. 30 where should I show? Deferred tax only. That's why we'll show immediately below tax expense. Immediately below tax expense, that is equal to 30 will show. Net number will be 70. Are you understanding my point? Correct. Na? So here, whatever the profit has come on that, this tax impact I have taken. Here, whatever the profit has come, which is not routed through profit and loss statement, on that I have to consider the tax impact immediately, because this number does not include E100. On 100, the tax impact is not included. Are you clear? Correct. That is the only point here. That's why the income tax related to 241, on 241, whatever the income tax applicable, they have written there. At the same time, the items which will be reclassified to P and L. What did I say? Items which will be reclassified to P and L. Getting my point? Means what will happen? Today it is routed through OCI, but in the future it will go and sit on the top, either income or expenditure. Are you getting my point? What did I say? I repeat once again. Today it is routed through OCI, but in the future it will go to top. P&L. Yes, it will go to P&L. Getting my point? Those items are some number we kept. Okay, some 2705. Right? See, observation you should look at immediately. So this is a positive number. Correct? Assume it is an income. Then income tax expenditure will be there. Agree? This is a negative number. Means it is an expense. Expense hai to, if it is expenditure, you will get the income tax benefit. Are you getting my point? So 543 is that is, so it is positive, then negative. Tax impact will be exactly opposite sign will be there. Are you getting my point? If you observe some financial statements, because I told as part of my review on behalf of ICR or some other things, no, both the places it will be positive, both the places it will be negative also. How it is impossible thing? It's a mistake, error, apparent error. Getting my point? If it is an income, income tax benefit will not come. You have to pay tax. If it is an expenditure, you will get a benefit to adjust with your income. Correct, na? Right. So that error do happen. At least they must have done. They don't do correctly. I mean, that is a balancing figure like that. They'll keep it. So it balance will tally. But afterwards, somebody sees no signing issue will be there. Fine. Let's ignore it. That's just for understanding purpose. So income tax related to this item will be here. Then after cutting this total is nothing but 1879. As we already said, this is going to be considered as A, this is B, this is equal to A plus B. Are you clear first whatever is happening on the board? Right? Uh, Now, right. So what is example? Yeah, this is what I have written already. Items that will not be classified to P&L. It will be routed through SOCI. SOCIE, statement of changes in equity. It will never touch P&L in lifetime. Lifetime it will not come to P&L. Getting my point? So best example is what? Revaluation reserve. We'll deal that point only specifically for you right now. Okay. Right. Next point, what is this? Items will be classified to P&L in the future. In the future. That is called FCTR. What is it? Foreign currency translation reserve. Foreign currency translation reserve, just I'm trying to recall. I don't expect that you will remember. Fine, even if you remember, consider it is okay, revision. That's all. In CA Inter, you must have studied foreign branch. Correct? Na? Foreign branch, you must, that was in syllabus. Okay. So in case of foreign branch, as we yesterday also discussed, na, TB will be foreign TB. I mean, dollar TB is converted into rupee. When you convert it, there will be some difference because for one item, one rate, for some other items, you will take another rate. That's why Pakka TB will not tally. So that difference, where do I keep? Under FCTR reserves may will keep it. Are you getting my point? But the point is, every time till the branch is there, it will go to FCTR directly. It will go to FCTR directly. Are you getting my point? Once branch is sold to somebody, that time the entire reserve will go to P&L. FCTR is the credit balance assume. Now branch is sold. FCTR account debit to profit and loss, other income will put it. Are you clear? Hope you understood. Correct. Now, what did I say? I repeat once again. Try to catch it. All these years, whatever the FCTR is there, it will go and sit in the reserves as FCTR. Till the branch is there, every year we will prepare the balance sheet. Whatever reserves, whatever losses, I mean, the differential number can be positive, differential number can be negative. All that will go and hit my FCTR reserve. Correct? Na? Once you sell the branch, whatever the cumulative number is there in the reserve, that number will transfer to P and L. Once it goes to P and L, the outcome will come to PAT only, PAT. Correct. Now, PAT, if it comes, it will go to retained earnings. That is called you surplus, you call. We call retained earnings right now. Name is changed, but balance is same. Are you getting my point? Reserves and I mean, you call surplus, you call P&L balance, you call, agree? Whatever accumulated profit you call, but all that points will delete it. I will write a new word called retained earnings. Just read the word. What is that I said? Retained earning. What is retained? I retained still. Earnings, yes, my earnings. What is retained means not a distributed, sir. Not a dividend given. If a dividend is given, it would have come down. Are you catching the point? So retained earnings. Name itself says whatever you left it with you still. Getting my point? Perfect. So that is what it happens. I'll take you one small example of this revaluation reserve. Okay, right. I'll allow you to copy. Fine. You need to have this in your notebook so that you'll in the this is a simple example. It's not like something great. But not today. Some guys are writing exam in 2027. Correct. Na? By the time if they don't write properly notes, no, they'll forget. There's chance, obviously high chances for correct. Na? Forgetting the high chance will be there. That's why better you write this. First understand it. I'll give you time to copy it for this. Fine. Right. Observe carefully. Right. See, as per accounting standard 10, first of all, there is no OCI. Correct. Na? Only we have P and L. So anything will go to either P and L or that's all only it has to go directly to reserves. Is it clear? Right. So I'm assuming, so land is acquired in 2020 we acquired. Agree? Right. For what amount you have acquired? You acquired for say one small number, 1 lakh rupees you acquired. Excellent. Right. So what is the journal entry you would have recorded? Land account debit to bank or cash, whatever it is, 1 lakh rupees you must have written. Right. So now all these, yes, we are following cost model. Yes, in accounting standard 10, cost model, revaluation model, both the models are available. Assume we are going by cost model now example. If you follow cost model, first of all, land is depreciable or non-depreciable? Non-depreciable. So it will be same number will continue throughout the life till you sell it. Agree or not? So till you sell it, carrying amount of all these years is going to be exactly same 1 lakh. No change will happen. But actually fair market value must have gone up somewhere, correct? Na? So now in 2020-26, assume you sold it for 1 crore, correct? Now, what is the journal entry you record? Bank account debit 1 crore. Yes, please. To land gone, so that is why 1 lakh. To profit and loss, how much? 99 lakh rupees you would have taken it to profit and loss statement. Agree? Right. This is very simple, basic example. Correct? Na? This you write, do not write, doesn't matter actually. Right. Now look at this in days 60. Now, to make you understand, we'll follow revaluation model. We'll follow. What do we follow? Observe the entire impact. So, land acquired again in 2020, say 1 lakh rupees. Same example. Whenever you acquire, accounting entry will not change. Land account debit to bank 1 lakh. You noted. Correct, na? Right. So now, what is the models you have available, my dear? Cost model, revaluation model available. But our company we have chosen revaluation model, right? Correct. Which model I am following? Revaluation model I am following. Perfectly all right. Now 2020-23, I'm doing it at revaluation means nothing but fair market value. Do you need to do revaluation every year? One question. If you are following revaluation model, nobody follows it. Correct. I have not seen so far. During articleship, I saw one company. That's all. That was my first and last example so far. Okay. I have not seen afterwards. Nobody follows. 99.9999% companies do not follow revaluation model, they'll follow only cost model. Right, but just example. But correct, ICI, though, even though nobody follows, ICI will ask still question, no? They like those only actually. Right? So that's why we need to have idea. Tell me, if you want to follow revaluation model, is it that every year I should revalue my fixed assets? Not necessary. 3 to 5 years. That is what told by the standard. Words 3 to 5, they only wrote it. 3 to 5 is not even my number. It's written in the so and so paragraph of the standard directly. Okay, where standard if you check, you will get that 3 word. You will get it there. I hope you understood. Well, understood. Are you supposed to do every year? Not necessary. 3 to 5 years you should. That's okay. We did for 2023, we did fair market value. How much is the fair value? 20 lakh. What is the journal entry? Do you have a gain or not? How much is the gain? 19 lakh. So what is the journal entry? Land account debit 19 lakh to revaluation reserve 19 lakh. Agree? Correct na? So revaluation gain of 19 lakh, land account debit to revaluation reserve. Now in this, should I transfer it to OCI? Should I transfer it to P&L? OCI. Correct. Now this is unrealized profit. I can obviously cannot take it to profit and loss statement. I have to take it only to OCI. Correct na? Right. So chalo. Now we will see. What is the carrying amount of this my land, my dear, after passing this journal entry? 20 lakh. Correct. Now one already there, 19 you increase, so that's why it become 20. Now look at just one small example. Statement of profit and loss. Everything is in numbers. Okay, first P&L numbers are coming. Say example, revenue is this much, expenditure is 60, so PAT is equal to 40. Okay, right. Those numbers just for the sake of I have given. OCI. So now where should I under OCI? What should I write now? 19. Correct. Now what is 19? Revaluation gain. Correct. Now we should write like revaluation gain, which will never be reclassified. But okay, that is I'm not bothered right now. So how much number, my dear? 19 has come. So now TCI, TCI total comprehensive income. What is it? Total comprehensive income. So that is equal to 40 plus, correct na? This 40 plus 19, that is what your 59 has come. Agree? Right. So now look at, observe here, statement of changes in equity. SOCIE, we'll see the movement. How does it happen exactly? Okay. Suppose first one is what? Retained earnings. What is retained earnings? Not distributed means it is nothing but your P&L balance. What do you call generally? Accumulated profit and loss, PA, accumulated profit. That is only our new name is what? Retained earnings. Surplus, some people will regard. That is only retained earnings. Okay, retained earnings name change, nothing else changed. Got it? Right. So already my previous year profits are opening balance is nothing but previous year profits. So 215. Now what do I do? Add how much? 40, 19, 59. Hmm? No, you think and answer, no problem. Online students also can answer. Shall I add 40 to 215 or shall I add 19 or shall I add 59? Why 40? That is the profit after tax. Okay, so that has to go to retained earnings. Why not 59? Revaluation reserve is a different reserve. See, our person is telling revaluation reserve is a different reserve. How can you add it to retained earnings? Is he correct? You understood, na? Profit should go to retained earnings, should go to normal profit, not with revaluation reserve. Correct? Now, revaluation reserve should be showed separately or it should be added to the retained earnings. Correct. So that's why all the time, correct now, my dear. So this 40 and 19 will be dealt separately. It has to be dealt separately. Agree? So this, right, E40 will go to current year profit of 40. Correct? Then 255 will come. And as he rightly said, revaluation reserve is a separate reserve. Agree or not? So we'll open one revaluation reserve. And reserves and surplus, revaluation reserve one line. What is the opening balance? Assume you never did revalue. Correct? Na? Just purchased and first time I am doing. So opening balance of revaluation reserve how much? 0. Correct? So plus 19, have you got it in the current year or not? Yes. So that's why I'll say current year revaluation reserve 19, total is equal to 19. My total reserves and surplus will be 255 plus 19. That you forget about it. This is statement of changes in equity, just a movement we have to bother. Movement means opening how much, plus how much, minus how much, then what is the closing. Agree? Are you comfortable with this first? Which number is moving where it has to go? Have you understood? Shall we go for the next year? I mean, same, this is 2023. 24 may also assume they have done the revaluation once again. Right? Observe carefully. Yeah. So 2024 also we have done the revaluation. Fair market valuation we did. How much is this right now? 50. How much is the carrying amount? 20 lakhs. So is the revaluation gain or loss? Gain. How much? 30 lakhs. So what is the journal entry? Land account debit. Correct now. To revaluation reserve. Perfectly all right. Yes, 30 lakh, 30 lakh. Here now, where will it go? Obviously, all the time it has to go to OCI. Correct na? Yes. So carrying amount of the asset is how much, my dear? Carrying amount of the asset 50. What about revaluation reserve? 19 last year we already brought it na? Correct. Current year again you added by 30. So 30 plus 19 is equal to how much? 49. So carrying amount of revaluation reserve is 49. Correct. So how does it impact now in the statement of profit and loss? Statement of profit and loss, first two numbers I will take as it is. Next year also same profit you got it. Just that is not the focus. Correct na? So now under OCI what should I show? How much number should come? 30 na 49 na? 30 na 49 na? 30. Why 30? OCI, profit and loss statement, OCI is for the period. Correct na? During the period, suppose example, so this 30 place, I mean 50 place may, it has become 15 it became. How much it became? 15. Are you getting my point? What is the fair value I gave example? 50. Now I am telling a revised example 15. How much was their opening? How much was the carrying amount? 20. 20 minus 15 means it is a revaluation gain or loss? Loss. So that is minus 5. Minus 5, what do you do? What do you do? We will reduce it from the revaluation reserve. To the extent revaluation reserve you increase it, no? To that extent you can decrease it. So you would have recorded revaluation reserve account debit to land. Correct na? So then minus 5 would have come in the OCI. Here what would have come, my dear? Minus 5 would have come if it was the situation of 15 lakh. Right? It's not necessary that it has to be only positive number. There is no such rule like that. Okay, that number, OCI number can be positive, can be negative. Just now you saw in the earlier slides, some number was positive, some number is in negative. It happens like that all the time. Nothing like it has to be positive only. Getting my point. But in my situation, in my whatever I have drafted, 30 lakh rupees is the current year revaluation gain. So whenever you speak OCI, OCI is not a balance. OCI is the current year impact. What is it? Current year impact. I hope you understood. So now my TCI is going to be 40 plus 30. Correct na? 40, this is 40, that is A, and this is B. So this is equal to A plus B, that is equal to 70. Is this clear? Correct na? At the same time, statement of other comprehensive, I mean, sorry, statement of changes in equity, retained earnings. What is the closing balance earlier? Last year ka closing balance will become opening balance for me. Agree? So now what should I do? Plus current year profit. How much number? Yes, exactly. Current year profit, that should go to here 40. That's it, 295. Next, revaluation reserve. Exactly. Opening balance 19. Next, current year ka 30. Correct na? So that's what 49 will come. I hope you understood movement, what entry will pass, how does it impact in P&L, how does it impact my SOCIE. Correct na? Now I'll take one more situation then and there. In the next year, 2020-26 assume. Okay, we sold it for 1 crore. Same example. Correct? Now tell me what is the journal entry we will get? Bank account debit. Super. Bank account debit 1 CR. 100 lakh. Correct? To land how much? 50 lakh. Super. To profit and loss. No, no. To profit and loss or to revaluation reserve? No, somebody saying no, no. That's why. It has to be to profit and loss only. Even though it was revalued, it has to go to P&L. P&L how much? 50. Another 50. Correct na? Yes, 50, 50. But if you pass this journal entry, till you observe the balance sheet, PPE is gone. Right? Correct na? PPE is gone. Correct na? But what about revaluation reserve? When still there. Agree my point? Why should I keep revaluation reserve when asset only not there? Correct. On this asset only, that revaluation reserve has come, profit has come. Asset itself is gone out. Then what is the point to keep revaluation reserve? Agree. So how much number is there in revaluation reserve so far? 49. That was so far unrealized reserve, unrealized profit, agree or not? Now is it becoming realized or not? You got now 1 crore. Is it realized or unrealized? Realized. But we will not transfer it to P&L statement. We will transfer it to retained earnings. Where do you transfer? That is what I am telling. So revaluation reserve, once it comes to, revaluation gain, if it comes to revaluation reserve, are you getting my point? Once it comes to revaluation reserve, it will never go back to profit and loss statement. It will never go back to P&L. So it what will happen? That to the extent of 49, correct? Now to the extent of 49, revaluation reserve is transferred to where, my dear? Retained earnings co, it will be transferred. Clear? Right. Now observe carefully. Right. So that is part, and where do you do this one? That is part of SOCIE. Again, I am doing this SOCIE. Statement of changes in equity, you must have already seen, correct? Na? But still I'm telling, like share capital, retained earnings, correct? All kinds of reserves and surplus will come here. All kinds of reserves and surplus will come, whatever it is there. Right. So general reserve, revaluation reserve in my example is there. Do you have opening? But this is I'm talking about 1/4/2020-25. This some 295 number, forget about it. Okay, revaluation reserve opening balance is 49. Now have you sold the asset in the 2026? 2026 means 25 say start and 26 ending. Agree na? Right, exactly. So now what should I do? Reclassification of revaluation reserve to retained earnings. So what should I do now? Movement should be here minus 49. Correct na? Same number will come and bring it to retained earnings 49. That is called reclassification of reserve. What is it called? Reclassification means this much. Reclassification means which will take place in the SOCIE. SOCIE, in the SOCIE, it will be moving from one reserve to another reserve is called reclassification. Is this clear? Right. There is one more word, my dear. Okay. Right. This is reclassification. It will never be routed through P&L. One more. If it is routed through P&L, it is called reclassification adjustment. Candidates are using two different language, two different words. What are the two words? One is reclassification. Next is reclassification adjustment. Adjustment means what will happen? It will go to P&L. P&L, if it goes to P&L, again from P&L it will come to PAT only, na? Via PAT, it will be added to retained earnings only. It will come to retained earnings only, nowhere else. That route is called adjustment. Directly in the SOCIE, from here minus, from here plus, if I do it, that is called reclassification. Is this clear now? The best example what I told, on sale of foreign branch. Correct. Now what do you do? If you have any FCTR balance is there, credit balance, we'll do FCTR account debit to P&L will transfer. Where do you transfer? P&L. Not to retained earnings like revaluation reserve. It will go to P&L. P&L, if it goes, it will come to PAT. That will come to retained earnings. End of the day, destination is retained earnings. Say, route is different. That's all. Is it clear now? So far, right? I suggest you to just copy quickly these three slides so that you will. This is important so that which number is going where you should have some idea. Yeah. Some Shashank is asking a question. Sir, we should consider less deferred tax expense from 19. Yes. Since I have not taught you deferred tax, I have not done. Okay. But we have to consider. When we reach Ind AS 12 taxes, I'll explain that. For the time being, it's like this. That A slide not required. There is nothing. This is what relevant for. Okay. So please copy this portion. So if I get an FCTR, correct, na? If I get an FCTR, like revaluation reserve, one more line item will come FCTR. That should go to in the SOCA, like FCTR also separate reserve. Agree or not? FCTR is a separate reserve. So we should create a new reserve, like revaluation reserve, how you create it, like that FCTR also should create a new reserve. And all the plus or minus should go there. It will be, no, it will not be taxed. When you are doing every year, that is only deferred tax what you have created. Deferred tax you created. Like when you sell it, what will happen? Deferred tax will be reversed, current tax will be created. Because when you sell it, actual gain should you should offer it to government. These are very basic but important fundamentals. Okay, so whenever I say FCTR, whatever OCI means, you should not think too much. OCI is just one movement is coming, just showed down. It will go and sit in the SOCIE later time. Shall we? Yeah. So this, can you quickly write this part also? Right. Schedule 3 balance sheet, division 1, that is for accounting standards. Correct? Division 2 is for what? Ind AS. Division 3 is for what? NBFC. Okay, right. You write it along with me. Schedule 3. Schedule 3 of Companies Act. Right? Schedule 3 of Companies Act, yes. It is into three divisions. Division 1, Division 2, Division 3. Right? So Division 1 is for what? Accounting standards. Whoever complying with accounting standard, they should follow. Division 2 for Ind AS compliant companies, but it is non-NBFC. Yeah. Division 3 is for NBFC companies. NBFC company. First and foremost thing, this is not in syllabus. Okay, and this is also obviously not in syllabus. CA Inter may already you have correct. In CA Inter you already studied, so it is not here. So only Ind AS Division 2 is applicable to you. Fine, right. Division 1 when you see, my dear, how does the balance sheet look? What will be there on the top? Equity and liability. Correct, na? Equity and liabilities. Heading will be like that. Correct, na? Under that, what do you say? You will say equity. Correct, na? Under equity, what will be there? Share capital, reserves and surplus. Share capital means that is will be equity share capital, preference share capital. Both will be there. Agree or not? Correct. Next, what will happen? Next, liabilities. Correct, na? Ha, liabilities. Under liabilities, what will come? Non-current liability, current liability. Right? Okay, some total will come. Then later, assets. Right? Ha, assets may non-current assets, current assets. Some number, total. Right? This is your format, what you have seen. Agree? But in case of Ind AS, it will be little different. How will it be different? First, what will come? First, only assets will come. Okay, these assets may non-current assets, current assets. Got it? Right. Next, what will come? Equity and liability. That's it. Equity and liability. Just, I mean, we are reversing. Correct, na? Right. Equity and liability. Equity and liability may, what will come now? Share capital, actually. Here, we don't use the word reserves and surplus. We use the word other equity. What is the word we use? Other equity. Yeah, other equity is nothing but reserves and surplus only, but language is different. That's all. Language is different. Okay, right. So this number here it is only equity share capital or preference share capital. Hmm? Both is not correct. Only equity share capital. Preference share capital, if it is redeemable, it is redeemable. Okay, then it is a liability. You know, redeemable means repayable. Repayable means liability or equity. Liability. So liability will come under liability. We'll go by substance over form. Will not go by the law exactly here. I hope you understood. Correct. So now as usual NCL, non-current liability, all that things are same. So now here preference share capital can come. But don't, I mean right now I cannot explain you 100%. Preference share capital always will come under this only. Yeah. Correct. Na? No, preference share capital or equity share capital is not the decision. What are the terms and conditions attached to the instrument is important. What I say? Terms and conditions of the instrument. Correct. Now, what is there in the preferential issue time? If it is convertible into equity shares, means are you supposed to pay money? No, money you must have already got it. Later, what do I give? Shares. It is convertible after 10 years, after 5 years, something like that. If they say into fixed number of shares, then it will be written as a equity. Under equity only we will write it. Under equity only we will write. That's why what we will say, we will go by the substance over form. What is it in reality? Is it in equity nature or is it in liability nature? If it is liability nature, we'll keep it under liability. If it is not liability, it will be equity, no doubt about it. Okay, we don't decide based on the name. Nomenclature decision, no, it will not happen. I hope you understood this small basic. Schedule 3 division 2. The format will be different compared to this one. Okay, what about NBFC? I mean not there in the syllabus. Right. So no non-current liability concept will not exist. No current concurrent concept will not exist. It's all going by like first only cash and bank will come. Liquidity oriented method it will come, which is highly liquidable, will come on the top. Okay, there also assets will come, equity and liability same situation will come, but the sub classification of current, non-current, under that financial, oh no, a lot of difference will be there. But anyhow, just for information, I told you it is not in your syllabus. You don't need to break your head for that. Clear? Right. So this is one small thing. Now we are entering into, right? You need to write. You need to write. The reason I am telling you, if you neglect, no, you will face problem later. Not only you face problem, and you will make me also face. Right? Because you don't have. If you see one basic thing, no, if you write, you will get an opportunity to revise it later. Agree? If not today, later you can revise. If you don't write, there is an opportunity to forget. Agree? Right. So little bit, and again, you will be awake also if you write. Agree or not? So some activity should be there. Right. All the time seeing TV, that is also dangerous. Got it? So better you participate and start writing something, then you will be active. Fine. And again, as I told you, all the big what do you want? You want a small salary or big salary? 4 lakh, 5 lakh rupees sufficient? Uh, per month. Okay. This is 4 lakh rupees, 5 lakh rupees sufficient per month. Agree. Right. No doubt. But 4 lakh rupees, 5 lakh rupees, if you say per month, into 12, how much, my dear? 50 lakh rupees. Who will pay 50 lakh rupees? Company only will pay. Correct. No, obviously not your parents. Right. So company only will pay. But which company will pay? Obviously, big company only can offer. They only will have the budget. Other people cannot have. Agree? Right. So big people will be following already in DSA. Correct, na? Yes, mandate. Correct. 99.9% whatever the salary you are expecting. Small people will not accommodate. Right. Some way, maybe you joined today a small company, sir. I was okay for 8 lakh rupees or 9 lakh rupees. You joined a small company, private company. Fine. But don't you try to grow? Yes, obviously you will shift. Correct. Movement from one company to another company is normal, obviously. We'll do that. That time, at least you need to learn the same thing in days. Wherever you go, first criteria will be what do you know about in days? And again, wherever they struggle, that company struggled, all that questions will come to you in interview. Obviously, no? What else they'll ask? Because they also don't know full. Where they struggle, that will ask. Like, let's see what this guy will tell. How does he think? That's all. Just to understand how do you think. Fine. So this subject is crucial if you wanted to be part of accounts and audit. So mandatory it is. Correct. Accounts and audit, though, obviously you need more and more knowledge. Depth knowledge is required. Right. And again, as you know, as we discussed yesterday, entire world is following. China also will come. Right? Japan also will come. Except US, everybody will follow. Then you will have a lot of opportunity. 99.99% is IFRS equal to Ind AS. So once you learn correctly, one subject, you have got world visa in another way. Right? Now, don't take it light. Don't take it light. People charge huge money for Ind AS and IFRS. Okay, because you don't know. I told ECL calculations. Once I do some 3 models, 4 models, maximum will come. I'll set all the models. Data will come. I'll just put it. But we'll say that we are doing it for 10 days to 20 days करके. No, 2 दिन में खत्म करेंगे. Okay ना? Right. We'll put the money. This is fact, man. So, but this you cannot do, no. This client cannot do. Impossible for him. Just impossible. I'm telling you. That's where you should cash. To be happy in days is difficult. That's why they don't understand. Then you can make money. But my point, a subject should be difficult always. Subject should not be easy. Somehow we'll struggle and pass. That's a different thing. Correct. No, correct. Right. Exam writing from your point of view, correct. But you should not see just this period of time. Na? You have to see the balance. That is more. Right? So no, I'm telling you, if you want to make money, yes. Outside India also, they don't know anything. Granted, I'm telling you. When I teach less than what I teach it to you, people from outside they will feel like, wow, इतना teach कर रहे हैं Ravikant. Seriously, this is the fact I'm telling. Outside India, if you deliver service, na, India में they'll expect this much and they'll pay this much. And outside India, if you do this much delivery, no, right, they will pay this much and they'll be happy also other way around. What else you want? End of the day, client is happy means it's good, no? Asset to you, right? Chalo. Next, I'm entering into this one small topic. Now, I mean, this all we are in basics. Today, full day, it will be in basics only. Nowhere else will go. Okay. But every smallest doubt also, please ask. Don't hesitate. Okay, right. My number already in the group, you know that, right? Telegram only you message me, not in WhatsApp. Same number for WhatsApp, obviously, but WhatsApp may so many my clients will also message. Correct now. Family also will message. Office also will message. So many messages will be there, which may immediately I may not be able to answer. And again, I don't remember like who asked what question. Also problem. Telegram is only for students. No relative, no client, nobody will message me. So at least I can go back and see have I answered this question, have I answered this question. करके I can go back and check. That's why I ask you people any question you ask after the class also. I'll be working from Ashes only. Okay, for any other client work also I'll be sitting here. If there is any visit, then after 9:30 I'll rush. That's all. Otherwise I'll be here only most of the time. Getting my point? That if you have a doubt, so today Saturday, Sunday, I don't. I also want to. You want to sit with me for understanding or something? Please come. Okay, right. This is not for today, tomorrow. This is throughout the period. Understood? Right. Ah. See, now I'm entering into financial instruments. Financial instrument. Okay, right. This standard is use standard. Use means use. Okay, mandatorily you have to get the grip. But right now it is just introduction. Nothing much. But very much important. Throughout life important for a chartered accountant. Throughout life important. Getting my point? Yeah. So financial instruments. This is discussed in three standards, my dear. Okay, it is not entirely discussed in one standard. That's why total all the three standards put together, it will come to somewhere 450 pages data will come. Bare standard, I'm telling you. Okay, 450 pages approximately. Yeah, it is discussed mainly fully. It is under Ind AS 109. This is a major. Okay, this is Ind AS 109. Recognition and measurement will be mostly under 109. Next standard number is Ind AS 32. Okay. Next standard is Ind AS 107. Ind AS 32 talks about presentation. Presentation. This is only disclosure. The disclosure standard only 30 pages are there. What to disclose karke 30 pages mein they told. You understood? Right. Ind AS 109. 109 is about recognition. Recognition, de-recognition, so many things. Impairment, hedging, everything is there under Ind AS 109. Right? So these three standards may done. Now, what do we this? What is a financial instrument? We are trying to understand what is a financial instrument. Standard says financial instrument is a contract. First and foremost thing, it's a contract. Okay, it's a contract. Okay, whenever I say contract, do you have two parties? Obviously, minimum two parties. Yes, correct. No, so there will be minimum two parties. Yeah, two parties. So suppose there is a sale contract, sale of goods. Right. What who will be there? There will be correct. Na? There will be seller, there will be buyer. Correct. Na? There will be a seller and there will be a buyer. Correct. Sir, I have issued a debenture. Yes, you have issued a debenture. You are the issuer. The other person is investor. Correct. Na? Right. So there is already. I have issued equity share capital. Yeah, my company is the issuer. Other person is investor again. Then it may be debenture or it may be equity share capital. For every contract, two parties are obviously there. Right. What does standard says? A contract which gives rise, which gives rise to, which gives rise to, what it gives rise to? It gives rise to financial assets to one party. One party ko it will become financial asset. Means one party books of account it will be financial asset. And second party co financial liability or it is an equity, say financial liability or it is equity to another party. Another party co will get what? Financial liability or equity. Getting my point? Right. Listen carefully. Listen carefully. If I take the sale contract, sale contract, I sold goods. What is it to me? Right. I will say A sold goods to B. Huh. So for A, what is it? For A, it is a debtor. Debtor is a financial asset. And sold to B, correct. For B, what it is? Financial liability. Correct. Na? It's a financial liability. Yes, it is a financial liability. It is a creditor, whatever you call. Trade payable, creditor, just example. Done. And what about, sir, I have issued debenture. Yes. A Limited, A Limited issued, yeah, A Limited issued debentures to B Limited. Yeah. So for A Limited, it is liability. Correct. Na? So it is a financial liability to A Limited. And whatever whoever purchased investment in debenture, correct na? So that is investment in debenture is a financial asset. It is an investment to this party. Agree? Right. So same way, correct na? Same way, he place this in this place. If I keep equity share capital, A Limited has issued equity share capital, correct na? So for A company, what is it? It is equity. What is it, my dear? Equity. Equity for A Limited. But that is nothing but investment in equity share capital. That is a financial asset. Yes, financial asset includes all debentures, I mean debt also, equity, whatever investment in another company's equity instruments is also financial asset. I hope you understood. So what is the definition? What does it speak? Financial instrument is what? Financial instrument is a contract that gives rise to financial asset to one party, financial liability or equity to another party. Once again, repeat, please. Financial financial instrument is a contract which gives rise to financial asset to one party, financial liability or equity to another party. Clear? Right. So now we need to understand one more thing. What is a financial asset? What is a financial liability? Detailed I will not explain, but just light information I'll give. Fine. Right. One question it should come to your mind. Fine. Right. What is a financial asset? First thing. What is a financial asset? Are you writing or not? No. You should write here. You'll forget. Why am I introducing this now? Because every standard has a touch with 109. Every standard. Okay. So any standard you start rough, just like that, sir, borrowing cost I want to start. Borrowing cost means loan. Loan is a financial liability. That's all. See, linked. So you randomly pick anything, it will come. Fine. What is a financial asset? Correct. Na? What is a financial asset? Means simple words, I'll close it. I don't go deeper because I told you, when we start 109, 109, I will not start towards the end. In the middle only, I'll clear. All the major standards, I don't want to take it to top, except consolidation. Okay. All other standards like 115, 116, 102, I mean 102 is share-based payments, revenue, leases, income taxes, all other things, except, I mean 109, we'll close it in the middle. Middle only we'll clear it out. Okay. Right. Chalo. So financial asset means first thing, my dear, first cash and cash equivalents. Remember like this. Cash and cash equivalent is a financial asset. Okay. Next. Right. Investment in equity instruments. Investment in equity instrument is a financial asset. Means one company purchase another company's share. Equity share capital you bought. It is a financial asset. Okay. Next. You have a right to receive. You have a right to receive either cash or equity shares. from others is financial asset. Simple words, I am closing. These are not the exactly terminology of the standard. Okay, but yes, the meaning is the same. Meaning is the same. Done? Fine. Yeah, that is financial asset. Sir, what about the financial liability? Financial liability means only one, where you have an obligation to pay. Yeah, what you will pay obviously, that is in cash. You have an obligation to pay. Whatever you are liable to pay, then yes, simple words. That's it sufficient. Okay. Yeah, right. Now observe carefully. If you take a balance sheet, just rough information purpose, I am telling you. Observe financial instruments ka what is the importance like that. Tell me what all will come. First, property, plant and equipment will come. Example, intangible asset can come. Correct. Now, investment property also can come. Fine. Right. This is fine. Next, what else will be there in balance sheet? Inventory will come. Investment can I write first? Investments will come. Next, loans and long term loans and advances will come. Agree? Correct. Now you tell inventory. Debtors will come. Cash and bank will come. Other current assets, correct? Na? Right. Other current assets also will come. Correct. Prepaid expense, all that will part and parcel of here. Right. Next, this side what will come? Equity share capital. This is reserves and surplus. Correct. Na? Loans basically. Next, deferred tax, I am forgetting about it. Okay, na? That means provisions. Can I say? Provision for what? Provision for gratuity. Correct. Na? Provision for warranty. Right. Creditors or trade payable something. Outstanding liabilities. Agree? Right. This is rough information, nothing very crystal clear. Tell me which are the standards applicable. Some Ind AS, I mean numbers you don't know right now. So Ind AS 16, Ind AS 38, Ind AS 40 applicable. Right. What are other inventory? You will apply Ind AS 2. Correct. Investments ko we have accounting standard 30. So here it is no 13 right now. It is Ind AS 109. Investment in equity shares, investment in debentures. Both will be dealt by 109. Okay, loans and advance. We don't have a standard in accounting standard. This also will be dealt by 109. Debtors. We don't have a standard in accounting standard. It will be dealt by 109. Cash and bank. We don't have a standard. Cash flow standard is not cash and bank. Okay. Yes, that also dealt by accounting standard. Some part of other comprehensive, what is it? OCA means other current assets. Yes, that is also part dealt by 109. Equity share capital, reserves and surplus dealt by 109. Loans, we don't have any standard 109. Gratuity provision, warranty provision. This warranty provision will be Ind AS 37 is going to deal it. Gratuity provision Ind AS 19 is going to deal it. Creditors, nothing is going, only 109. Many outstanding liabilities dealt by 109. Understood? If anybody knows, I know everything except 109. That means you don't know. Actually, you don't know anything. Understood? That much important. Balance correct. Now, if you want to call yourself accountant, chartered accountant, something, no. Without 109, you can't call yourself only. I hope you understood. Everything in the balance sheet will be covered, my dear. That's the beauty, difficulty, whatever it is. Fine? Right. So, right, next question. Now, one small question, just to start. Tax payable. What did I say? Tax payable. Is it a financial liability to the extent I taught? How? It is an obligation to pay. But before that, you forgot one line to read. There should be a contract. It's a contract which gives rise to. It's a contract between whom? You and income tax department. I don't want to have contract only. Correct. I don't want to pay tax then. Right? Do you have any contract? No, no. This is not a contract. It should be a contractual obligation any day. What is this? When I say obligation means it is a contractual obligation. No, there is no contract. This is a legal obligation. So that's why, is it a financial liability, my dear? No. So GST payable? No. You are correct now. If you see that whatever GST payable, no, all these things, all tax related. GST payable, yes, no, it is not financial liability. The GST input credit is there. No, it is not a financial asset. Correct. Input credit, all tax related input credit I have. It is an asset, but it is not a financial asset. Understood? It is an asset, but not financial. Legal related things, anything is there. Advance tax I paid. Tax? No. Simple. Blind rule, you remember? No. Got it? Right. Now, I'll tell you one small, right. Now, we'll enter into one more level. Financial asset, financial liability. Now, when I say recognition, what do I say? Recognition. Recognition and measurement. Right. Recognition and measurement. Right. Both, my dear, financial asset and financial liability. Right. Initially, initial recognition. Initially, first time when it becomes asset, when you enter into a contract, then you will be part of the contract. Correct? You also become a party to the contract. You have to record at fair market value. What are you supposed to do? You have to record at fair market value. This is what crucial. It should be recorded fair market value. Financial asset or financial liability. Right. Generally, what happens, at what rate you have exchanged, transaction price, I'll call. At what rate the deal has happened. That itself is a fair market value you should consider. But every time it will not happen at market rate. Every time it will not happen at market terms. Correct? Now, market rate means it won't happen. So then what are we supposed to do? Then you need to find out the fair market value and record it. Right. Simple example I'll give you. Example, government gave a loan. Gave a loan. Okay. Interest free. What is this? Interest free. But actually market rate of interest is equal to 10 percentage. Market rate is 10 percentage. You're getting my point? But government gave me free of cost, whatever the reason. Some scheme, under some scheme, I am satisfying some conditions. That's why I got the interest free rate of interest free loan for me. Some whatever X money, 1 crore rupees, I got a loan. Now, tell me, how much, right? When are you supposed, repayable? When are you supposed to pay? Repayable. Repayable when, sir? After 5 years, I am supposed to repay. After 5 years, I am supposed to repay. Now tell me, how much you received today? 1 crore. But when are you supposed to pay? 5 years. Is today 1 crore received payable after 5 years? Is it same? Huh? No. Worth is different or not? Correct, na? So, what is your liability actually speaking? It is not 1 crore. Your liability is lesser than 1 crore. Agree or not? Because you got the money today, you are supposed to pay. Same 1 crore only will pay. But 5 years, are you enjoying the benefit or not? Market rate is 10% and you are paying 0. Correct? So then what should I do? 10% fifth year factor, how much? Can we discount? You have calculator. Yeah, 1 divided by 1.1, 5 times is equal to, you press 0.621. Correct, no? Right. Yeah. So present value factor at the rate of 10 percentage. That is for fifth year. For fifth year is equal to 0.621. 0.621. Correct? 0.621. What do you record now? Tell me. 62 lakh will record. First, money you received now 1 crore. Can I record cash or bank account debit? Right. Bank account debit. Have you got 1 crore or not? Yes. So to loan. Loan is a financial liability or not? Yes. Financial liability must be at fair market value. Yes. So fair market value is equal to how much? That is equal to 1 CR into 0.621. That's why 62 lakh. I'll just round it off. How much you should write? 62 lakh you are supposed to record. Correct. Now, what about the balances, sir? This is the balancing figure. Balancing figure is equal to how much? 38 lakhs. Where should I keep this for 38 lakh? Loan. Isn't it a government grant? Has government helped you or not? Yes, it is a government grant. We'll record deferred government grant, D for deferred. D for deferred government grant. How to account this? That we will discuss under Ind AS 20. Yes, it will be discussed under Ind AS 20. I hope you understand. Now, listen carefully. Same situation. Company gave a loan to employees. Car loan. 3 years may you pay me money. Correct. Now, what is the rate of interest? Maybe free or maybe concessional rate. Market rate only if they are giving, nobody will take loan from company first. Why should I take? Correct now. So obviously company giving means company also ready to lose something. That is the difference amount. There also difference will come or not? Yes, that difference is employee benefit expense. Or it may be prepaid salary. It can be asset, it can be expenditure. Are you getting my point? So some places things will not happen at transaction price. Market rate may in the same market rate it will not happen. So when it doesn't happen in the market rate, you have to bring it to market terms. That is what fair market value you have to bring. You have to record financial asset, financial liability initially at fair market value. Clear? This point. Have you noted? Think from here, is it? Yeah. Any other examples you find generally in a normal plain business may what are any other examples? Other examples what? Employee loans, correct? I told just now. Employee loans. Correct now? That means loans given to employee. Advance loans and advance to employee. Correct now? That is one. Next, one more example you should tell actually. If you think little will come. Intercompany loans. Yes, perfect. Intercompany loans. Holding to subsidiary, subsidiary to another subsidiary. Generally, it will not happen in market rates. Correct, no? Right. Next, one more normal, one more thing. Isn't rental deposit, my dear, first of all? Rental deposit, you will give deposit and you will get back it after 3 years, 4 years. Same money, no? Do you get any interest? No, no. Are you getting my point? So that also what will happen now? Rental deposit. Rental deposit example. Sir, rental deposit we gave 1 lakh, just example purpose. Receivable, it is a receivable. Receivables are 3 years afterwards because lock-in period is there, sir. Lock-in period. You cannot cancel within lock-in means you understand that. Correct? Na? 3 years after 3 years, I'll get back my 1 lakh rupees. Now tell me how to account this. Discount. Assume rate is equal to 10% applicable to you. 10% ka 0.751 will be the present value factor. PVF, present value factor. Now tell me. What is entry? Entry. What is debit? First deposit. Deposit account debit. How much? 75,000. 75,100. I wrote it down. 75,000. Okay, na? But correct na? To bank. To bank 1 lakh you give. Next, there is a balancing figure or not? Yes. What about this? It is prepaid rent like that your institute book has told. But it is not prepaid rent actually. It should be ROUA. Okay. This will be dealt by, this is dealt. This is dealt by Ind AS 116. It is indirectly you gave a rent. Yes or no? Correct. Now the 25,000 rupees is a rent. This 25,000 rupees will be charged to P&L over a period of 3 years. You lost 25,000 rupees opportunity cost or not? It's lost. Correct. It is lost not in one shot. It is lost in 3 years. So 25,000 rupees by 3 every year I'll put it to P&L as a rental. But actually it shouldn't go to in your book, textbook, what is there is wrong. Why wrong? How can you tell? Technical guide of ICI only will tell. I can get you the example. When I explain that 116, I'll show it to you. Understood? This point only that student asked 5 days before asked example. Iday example. That much. In how much time I closed? 1 minute maximum. Nothing else is there in that. But the ICI will create like one big paragraph for you. Rental deposit. What should I do? Bring it because it is also not at market terms. It should be recognized at fair market value. So market rate is 10%. Percentage you don't need to bother, my dear. In exam, they will always give. They will not ask you to find out what is the percentage in the market. Correct, na? So they will give you. Just need to multiply and put the deposit number. Balance number will become either prepaid or ROUA. Correct. Your book says prepaid. Practical, not practical. ICA, another material that is technical guide. Only it will tell it should be ROUA. What is ROUA? Right now you cannot understand. I agree with you. Just write ROU and forget about it. Later you will catch it when you come for next round of revision. No, when correct that time you will understand what I am talking right now. Understood? Right? So like that you identify where all generally happens not at market terms. Otherwise, most of the things will happen market terms. Few only can happen like this. Understood? Next. Fine. One more, some basic point you remember. I want to bring something to market rate, market value. Then I should discount it at which rate? Market rate. Suppose sometimes example, okay, loan given, example, loan given at 5%. Okay, how much you gave loan? 1 lakh I gave. Are you getting my point? Then what is that I am supposed to do? But market rate of interest. Market rate of interest how much? 10%, let me say. I want to bring this to market value. When you want to bring it to market value, you should discount the cash flows in which rate? Market rate. Not again, if you again do with 5%, it will come to 1 lakh only. You understood my point? Can you make a one line? One liner? Yeah, star you start with. Just mark it. Important. Star mark. If you want to bring any amount to fair market value, FMV. If we want to bring any amount to FMV, discount it at market rate. Discount it at market rate. Clear? It's important. Fine. Have you noted this example also? Rental deposit. My suggestion, I don't write very fast. You can do along with me. That's what I feel. Okay. Next. Next very important point. So far, what is that I discussed, my dear? Initial recognition. First time when you enter into agreement, or first time I gave a loan. Today I gave a loan, I record this entry. That much I taught. But what will happen over the period? That is called subsequent measurement. What is it called? Subsequent measurement. That is called subsequent measurement. Subsequent measurement based on some rules regulations are there. Like I can say like some models I should call, but right now not required. Some rules karke just keep it in mind, right? Some rules. Business model. Okay. SPPI model. What is business? What is SPPI? We don't know right now, but simply try to understand. Financial asset. Financial asset is classified into three different. Okay. Same way. Financial liability. For simplicity, I am telling only two. Financial liability is classified into two. Really not two. More than that. Okay. But just for simplicity, to start with, that is sufficient. When we go in deeper, I told you, I'll teach minimum 8 days financial instruments. It's required. Throughout life, I told in a balance sheet, you understood already. If you don't know, means you don't know anything. That much. Okay. Yeah. So financial asset is classified into how many? Three. Financial liability is classified into two. Okay. First one is called amortized cost. I will explain what it is right now. Okay. Amortized cost. What is this? amortized cost. Next one is called FVTOCI. You write full form. FVTOCI short form. Correct. Now, full form is what? Fair value through OCI, other comprehensive income. Right. Write it. Fair value T for through. OCI is OCI, other comprehensive income. FVTOCI. We'll understand what it is. How does it work? We'll understand. It is required because I want to use these words in the future. I want to, that's why I'm introducing it to you right now. Okay. That's why I told it is important. Right. This is FVTPL. FVTPL. So tell me what is FVTPL? Fair value through PL. That's all. Means that value will go to P&L statement hai to FVTPL will tell. If that value will go to OCI, we'll call FVT That's it, nothing else. Okay, right. Amortize FL also. FL also first classification is FVTPL. Second classification is amortized cost. Amortized cost. Right. Sir, is there any difference between E side amortized cost and that side amortized cost? Same, my dear, no difference. Spelling also same. Okay, right. So there is no difference at all. All are same. Done. But FETOCI is not there for financial liability ko no. You see, Infosys company. I gave one time. I didn't tell in my LinkedIn post. If if you just spend 10 minutes afterwards at office whenever you want. Infosys company annual report you download. Fair value through OCI it will be there. Financial liability ko. I don't know why. There is no such concept in the world. I am telling, not in India. In IFRS also it is not there. This is one mistake. Like every year it is coming. It is not getting corrected. For so many years I am observing. Without mentioning Infosys name, I wrote one LinkedIn post generally. Some big companies may also it will happen. Okay, yeah, it happens like that. We don't know. We can't tell anything. Fine. Hope you understood. Right. So FETOCI concept doesn't exist with respect to financial liability. It is only with financial asset. Is it clear? Then shall I go ahead? Perfect. So now what is amortized cost? Shall we understand that? Now before going to that, one small example I'll tell. You copy the example. I'll use Excel. I'll show it to you. How does it happen? What do we do? Okay, right. Observe. I mean, copy example. So let's take. I have taken loan. Taken loan. Loan means it is a financial liability. Amortized cost method is there for the financial liability, financial asset, both. I told both are one and the same or not? Yes. So loan taken. Loan taken. How much? Say example 1 lakh I will tell. Loan taken how much? 1 lakh. Okay, perfect. So now what generally what will happen, my dear? Coupon rate. Tell me coupon rate. Coupon rate means what? Interest rate. But interest rate means what is mentioned in the agreement. Mentioned in the agreement. That is the rate you are supposed to pay. The example 10% I am supposed to pay. Coupon rate means mentioned in the agreement. Mentioned in loan agreement. Right. Will they charge you some processing fees and etc.? Yes, processing fees. Say some to 3,000 rupees they have charged. At the same time, registration fees, documentation charges. Documentation charges are sometimes my NBFC and all people know they will not get loans so easily. Broker will be there for that also. Yeah, they will give you the contact of the investors, other party who is interested to purchase your debentures and etc. You have to pay a good amount of brokerage also for that. Okay, via brokers it will happen. So documentation charges means registration charges. Big loans has to be registered. Loan registration will happen. Correct? Na? Yes, you are to supposed to pay so many things. So 2,000 rupees. But actually net receipt, net received. How much net received, my dear? 95,000 rupees are you you will receive. Agree? Right. So far you understood, na? Right. Follow me carefully. Excel I'll apply. Okay. Uh, just a second. See, 95,000 is the actual amount you receive, correct? Na? But actually, contractual cash flows like Y0 means day one. Day one, correct? Na? Y0 means day one. Day one, how much you received? That is a positive 95,000 you received. Agree? Right. But how much are you supposed to pay year at the end of that? Assume interest is paid yearly, just for understanding to make it the concept easy. Okay. Year one, year two, year three, 3 years loan, I think I told. Right? Not told? Okay, we'll tell now. Okay, 3 years loan. 3 years loan hai to how much do you pay first year? 10,000 I will pay first year. That is minus. Next year, how much you will pay? 10,000. Next year, 1 lakh 10,000 you will pay. That is along with the principal. Agree, na? Principal you have to pay 1 lakh rupees only, na? Right. So coupon rate is calculated for what? 1 lakh into 10 percentage. You have applied coupon rate to pay actual amount. What is that I am supposed to pay the interest? No, I have to calculate like this. That is very simple. But actually, what is your real rate? What is the real rate of interest? Is it 10%? More than 10% or less than 10%? More than 10%. Why? It's not just interest. Any borrowing cost. Are you losing only 10% or more than 10%? More than 10%. What is the name? Processing fees you will call, documentation charge you will call, brokerage you will call, some other new name you will bring. Correct? Na? Whatever the name, am I losing more than 10 percentage or not? Correct. So now first point. Have you noted so far? I'm explaining heading you keep somewhere amortized cost. What do you mean by amortized cost? You need to have some idea. Then now listen, my dear. Point is here in accounting standard mein, in AS. How do you record this first day one? Day one, how do you record transaction? Loan bank account debit. We received loan, correct na? So bank account debit how much? 1 lakh. To loan. To loan how much you will record? 1 lakh. Sir, but you paid 5,000 rupees na? This is journal entry number one. Next journal entry. 1 minute. Processing fees account, processing fees expense, correct now? Processing fees expenditure account debit, that is equal to 5,000 rupees. Everything I'm clubbing and one. Okay, na? Expense end of the day, correct na? To bank, I will pay 5,000 rupees. Generally, what banker will do? They will not cut and give you 95,000. In one check, they will give 1 lakh. In another check, they will take 5,000. Okay. So we'll say processing expense account debit to this. This is what you do in accounting standards. Hello, correct? But in days May, this is not the same thing. In days May, what do we record? First, you received how much? 95. So we'll record directly bank account debit to bank account debit 95,000 to loan 95,000 will record. Loan itself 95,000. But sir, by end of the day, I have to pay how much? 1 lakh. So now 1 lakh, now this 95,000 rupees, am I supposed to bring it to 1 lakh or not? That is what we are doing now. What is that? amortized cost. Yeah, that for that purpose, what do? We have to calculate. What is that we have to calculate? Effective EIR we call. What is EIR full form? Effective interest rate. Effective interest rate. Effective interest rate is nothing but IRR in simple words. Internal rate of return. Okay. Yeah. Just give me a second. I'll show the Excel. By the time you copy this, please. Yeah. Just a second. Uh, So you need to calculate effective rate of return or effective interest rate. That is nothing but IRR you have to calculate. How do you calculate IRR? Any idea? See, IRR formula you can apply one way or other way around. In Excel, I'll just show it to you. You must be knowing, maybe some of you. Goal seek method, have you heard? Apply goal seek method. What is this? Goal seek formula, not formula. This is just goal seek is one small button. Just you need to apply that. I'll show it to you how to do. When you apply this, no, you will get exactly IRR. Perfectly, it will come. You don't need to rethink about it, right? Huh, 1 second. So IRR will be this in this example, Amma. IRR will be, say, example, it must be 10% plus only or not? Yes or no? Correct. So what rate it will come? How does the journal entry flow will happen? Once you understand with one example, no, then I can take you through the entire your syllabus. Wherever amortized cost, you will never get the doubt. Okay, we'll do that little after the break. Fine. The reason it won't work in iPad. That Excel comfort will not be there. I tried to do it in the laptop, but some issue here it is coming there in the on the screen it is not coming. For the online people can see, but you people cannot see. I'll just add my laptop. Then I'll be able to show it to you. Just by the time you just take break. Both will happen. Yeah, I'll give you some example. The same example will continue. If I'm by mistake, first if I forgot, no, just like yeah. Right. So what is the loan amount, my dear? Actually, loan amount is equal to 1 lakh. Right. 1 lakh. Coupon rate is equal to 10%. Rate is 10%. Whatever you received, net received is equal to 95,000 because after all this thing. And as per Ind AS, you have recorded, what is that you have recorded? Bank account debit, correct? No? Bank account debit, that is equal to 95,000 rupees. And to loan you don't. Yeah. Don't tell me, sir, confirmation, how should I give? Correct. No? Confirmation, you give 1 lakh only, but our accounting will be like this. I can't change accounting because of your confirmation. Otherwise, you can keep two accounts. What are the two accounts you keep? Correct. No? Loan account, you keep it. Loan account, you keep it as a credit balance. Credit balance of 1 lakh rupees. And deferred processing charges or something like that. You whichever name that is the process, because this won't come outside. So it will be processing charge karke something you keep. This will be under debit balance you will keep. Because the processing fees earlier used to go to PN. Now it should go to balance. Right. So this will become what? 5,000 it will become. But you classify both classification, correct? Now classification, it both will be classified as what? Loan only, loan classification only you give for this, you give for this. You're getting my point. We'll have how many accounts? Two accounts. Right. I don't want to take this headache of this. Then this is the best and simple example. 95,000, 95,000. Correct? Now, what are we supposed to do? I said like, what is the effective rate of interest? Listen carefully. Opening balance, I'll write it. You will also copy it afterwards. Observe what is happening. And next, interest. What is the interest you are supposed to? And whatever the payment. Will make the payment. And this is what my closing balance. Okay, perfect. So this is year one, two, three. Perfect. I'll say rate of interest. Rate of interest is how much? 10% is not the effective rate of interest. Do you agree? 10% is not effective rate of interest. Okay, for the time being, I'll take 10%. We'll prove that it is not effective. What is opening balance of loan, my dear? What is your loan balance? 95, not 1 lakh. I hope you understood that. Correct, na? It is not 1 lakh, it is 95,000. Now what do? I just apply this into 10% is F4. I am clicking. Okay. Right. So you just freeze it. Yeah. So now same interest will be on everything on the opening balance it will be. How much are you making the payment per annum? 10,000. You have to pay this. This is the contractual payment. You don't have an option. You have to make a payment like that. 10,000. Correct, na? 10,000. Next time also 1 lakh 10,000 you are supposed, right? 1 lakh 10,000 you will pay. Agree? So what is the closing balance, my dear? 95,000 plus interest plus interest. You have to pay actually. Correct. Now, minus what you have already paid. 10,000 you pay. Agree? So I'll take this. And whatever is the last year closing balance will become my opening balance. But actually, if the 10% is the real rate of return, this number would have become zero. That is not the real rate. Agree? So what rate then, sir? Is it 11%? I'll just try 11% because we have linked everything. It will come to how much? Still something is wrong. Correct? Na? So 12% not this. Okay. 12 percentage I'll apply. Still 12% little more. Correct? Na? 12 point some number will come. Agree or not? Then how many times you'll try like this? Correct? Na? Not possible. That's why go to data. You can see no screen. Now sometimes what happens? All those things will not appear. In iPad, if you try now, we'll be doing something, but you can't see. You can see only the screen. That's why I asked. Okay, here what if analysis, something is there like this. Here you will find a goal C. Can you see that? Click that. That's all. You don't need to do anything. Just click. Click. Hit cell. Which cell you want? 0. The 276 or some number. Correct. Now, whatever. H12 something. I kept H12. I kept here. To which value? How much value you wanted? You wanted to be 0. By changing which number? This is F8 should be changed. Agree? Say just click. Say OK. Okay. Okay, you did. Correct. So that also 12. No, my dear, not 12 exactly. That is 12.08 is the exact, not 12.08. If you see here, can you see in the formula bar somewhere? Correct. Na? So many are there. 12.08477831 something is there. We don't care about all those things. So this is the effective rate of interest. What is the effective rate of interest, my dear friends? 12.08 is the effective rate of interest. Now, correct now? Right. So now how do you record the journal entries, sir? Now I'll record the journal entries for you. So year one, um, yes, year one, I'll record. Year two, okay, right. Year three, perfect. Listen careful, right? So now first, what should I record? What is your interest expense? 11,000 or 10,000? This is only your interest expenditure, not the other number. Are you getting my point? Right. What should go to P&L? 11,481 should go to P&L, not 10,000 rupees. Correct. Now, suppose, sir, this loan I have taken for a qualifying asset. Have you heard this word qualifying asset? Accounting standard 16 in the past you heard. Then it should be capitalized. Which amount you will capitalize? E amount I will capitalize. Wherever it, whether it goes to P&L, whether it goes to balance sheet as an asset, it has to be that F column only it has to. F column only it has to go. That means E numbers only will go. No, no, not G column will never go. Is it clear? Right. So now what is the journal entry will record? I will say interest expense account debit. Yes. What number I should debit, my dear, first year? 11,481 only you should debit. Correct. Next year, which number? So can we copy paste? Yes. We can copy paste. Right. Transpose if you apply, it will. Okay. Right. Perfect. Interest expense to what do we record? To loan. Right. To loan will record. Same number, I'll just keep it. Then next, what do you say? Loan account debit. Have you made the payment or not? Yeah, we made the payment. How much money you made payment? This number only you made the payment. Yes, exactly. So that's all. Perfect. Have you understood? Like this, it will happen. What is amortized? Amortized balance is this balance only. Amortized cost means this is 96,481 is amortized balance. Observe, first year 96,000, next year 98,000, next year it has become 1 lakh and you pay the principal of 1 lakh and it is cleared. Exactly. Have you understood method? Hope you got it properly. Correct. No? So you should not ask me once again what is amortized cost. Amortized cost is last column is amortized cost method. What is actually happening, my dear? Tell me. What is actually happening? ASK, if you consider, no, my dear. In the profit and loss, if I take it, correct? Na? I'll take year 1, year 2, year 3. Correct? AS may. What is happening first year? 5,000 rupees I am charging. Correct? Na? 5,000 is what? Processing fees. And interest am I charging 10,000? Yes, I am charging 10,000, 10,000 like this. Agree? So this is 0, this is 0. Totally, if you take it, this totally, if I take, that is 35,000 rupees is my charge as per AS. Correct. But charging is getting different. 15,000 in first year, 10,000, 10,000 next year. Correct? But same thing if you consider Ind AS. Right. Ind AS may what is happening, my dear? Same thing only actually. End of the day, my charge is charge. It cannot be more than that. More than what I have incurred, how can you do? I can't do. This is 35,000. Now, is it spreaded over the 3 years based on the opening balance of loan? Correct. Now, my what is opening balance of loan? Given here, na. My opening balance of loan is in the ratio of opening balance of the loan. I mean to say exactly. Correct, na? Yeah. So it is going to be this way, right? Whatever it is, you understand that, right? So my balance of the loan is increasing. That's why correct 95,000 to 98,000 it has come. So that's why like 11,480 to 11,860 it has come. The loan opening balance has gone up. That's why my interest amount also has gone. In the ratio of opening balance indirectly, but not exactly. Effective rate will not tally exactly, but for understanding purpose. Now, which is correct? You feel? Easy is first one, no doubt. Correct, na? AS is easy. Simple. First day only charge it. I headache. Why? Correct, na? But actually speaking, this 5,000 you have spent only for the purpose of loan? Yes or no? Correct, na? And loan is there for 3 years for sure. Then why charge only in the current year? Then where is matching concept as per you? It has to go for the 3 years only, na? Benefit of the loan is coming for 3 years. So cost also should go for 3 years. Should not hit only my first year. Hey, huge money, I'm telling you. If you look at the NBFCs and etc., na, huge money will be there. Borrowing cost like brokerage 5%, 6%, 10% sometimes. Getting my point. 2% also will be there, 1% also will be there. All percent different. The other party is in need of loan for correct now. How much need is there? Depending upon the high need is there, correct now. Then you have to pay more brokerage. It's always. Some loans processing fees will not be there, but some loans processing fees are huge. On FMCG company, last month I have seen, December month. That is an LLP basically, FMCG, but LLP not required, but somebody wants to buy that company, that LLP. That investor is from outside India. He is not able to understand our again LLP formatting, you know. It will not be, not even Schedule 3 format. It's all DABA format. Correct now. Then investor told first, if you want to start discussion, first bring me it in IFRS. Got it? Yeah, we have to change everything and we have to follow this loans. They were having loans. Their use, I'm like we saw someone, but I don't want to disclose that name. Huh? Okay, huge amount of processing. They were in need of money, so other party enjoyed. Right? It happens. Right? Can you take this, my dear? I think from this place you can take. Correct, no? You take even this simple analysis of this one also. You take it so that it will be useful for you for easy revision. IRR formula, all those we can apply. But if you apply, no, still there will be, because it will not go in month also. Actually, practically, what will happen? Month on month, you have to pay. Agree or not? That time IRR will not work perfectly. Always formula you have to adjust it. Forcing is the best method. But if you observe here now, which formula you applied means you will not know. Because in the formula bar, if you see only directly number will be there. How does it matter? As far as it is coming zero, this is perfectly correct number. Okay? Yes. Please make a note. In exam, you don't need to worry about IRR, how to calculate. They will give. Okay. Whatever the goal is practical. Okay, fine. They'll give percentage. You don't need to break your head for that. One question, I mean, someone asked, anyhow, I wanted to do that. Right. Observe this. Right. Ah. See, you have given a deposit, rental deposit. Correct. Na? We did already one small sum. Rental deposit given. How much you gave? 1 lakh rupees you gave. Correct. Na? Right. Is there any interest? Interest are you charging on rental deposit? No, we are not charging. We don't get any money. Today we gave 1 lakh. Correct. Na? But it is supposed to be rental deposit is a contractual asset or not? You have a right to receive as per the contract. When I vacate this place, I will vacate after 3 years. You have to give me 1 lakh rupees back. Yes, it is a contractual. So it is a financial asset. Correct. Now it is a financial asset. Yeah. So since it is a financial asset, it has to initially it should be at FMV. Correct. Now, fine. So what is the market rate, my dear? 10% if you take. Market rate, I took 10 percentage. Done 10 percentage, I have taken. Present value factor 0.751 something will come. I just told that same number. So what is the fair market value? Fair market value is equal to 1 lakh. I increase the number 0. Okay, right. So it is going to be right. This number, yeah, 75,100 rupees. Initially you got it. So what is the journal entry I said? Deposit account, rental deposit, whichever, you know that. Okay, deposit account debited to bank, and one more is what? ROUA account debit. Okay, right. So how much is the value of this? This is this number, correct? Na? And your 1 lakh rupees is key number, and this is nothing but this minus this. This is B bar F. This is a financial asset, correct? Na? Financial asset initially should be recognized at this. But on the balance sheet date, so suppose this date I'll keep 1/4/2025. Some date I'll keep it. But as on 31st March, 31st March means what is this? Subsequent measurement. What is it called? Subsequent measurement. Subsequent measurement financial assets are how many types? Three types. What are the three types? Amortized cost, FETOCI, FETC, FETPL. Correct na? This is not OCI, FE, no fair value. It is amortized cost. So deposit, which method will follow? Amortized cost. Why means you will understand little later. I told you know some models are there, business model, SPPI model, something that I cannot explain right now. You cannot catch also, right? Okay. So just hold. You want to follow which method, my dear? Amortized cost method you are supposed to follow. Now tell me, because my dear, today your asset, how much you wrote? How much you wrote asset? 75,000. Correct, na? When you write 75,000, but after 3 years, how much do you get? 1 lakh. That means by this time you are supposed to take it to 1 lakh or not? Yes or no? Are you following me? What did I say? I repeat once again. How much is the asset? But after 3 years, how much you will get back? 1 lakh. So when you get back 1 lakh, you're getting my point. So by that time, it should be 1 lakh only, na? Otherwise, where do you put that balance again? Ah. So it is also right. That is amortized method you are supposed to follow. Here, what is IRR? Can I calculate? Amortized cost means again effective rate of interest I should calculate, na? What I am trying to tell, you don't need to calculate because at what percent you discounted? Then you reverse it at 10% only. It will come to 1 lakh only, na? Yes or no? Yes. I hope you understood. What did I say? Once again I'm repeating. What rate you discounted? Same rate you reverse.
It 1 lakh became 75,100. When you reverse it, 75,000 will become 1 lakh exactly. Hello, correct? Ah? Right. So there will be some slight difference will be there. 1.1 this to the power of this to the power of 3. Correct? Okay. Exact number I brought it. Otherwise, again I have to adjust. Right? So fine. So now what am I supposed to do, my dear? Same concept of opening balance, closing balance. यहाँ पे है ना? Same. I'm just taking the same numbers. I'll change obviously. So now listen, my dear. Right. So what is your opening balance of deposit? 75,000. And what is your rate of interest should be? Correct, na? This 10 percentage is what? G 26. 26. Correct, na? 10% we took. Are we paying, are we receiving any money in the beginning, my dear? No. Do you receive in the second year? No. What do you receive in the last year? 1 lakh I am going to get exactly. Correct, na? Right. So one second. It has to be like this because it was linked to above percentage. So that's why it exactly become 0. It has become exactly 0. Have you followed me? Now tell me entries bolo. First entry on the date of first day I told. What about year one? Year one, year two, year three. Journal entries you are supposed to tell me now. Yes, please. Deposit account debit, not ROU. Interest income. This is interesting. This is an asset, na? But loan. It is like an advance given to other party. Advance, if you give it to other party, what do you get is nothing but interest income. What do you get? Interest income. But whatever you created ROUA will be depreciated over the period. So forget ROUA will not come once again. ROUA one time it will come, it will be depreciated over the period. Are you getting my point? This is interest income. What is this, my dear? What all you got, all this number is nothing but interest income. Okay, right? That's all. Now, by the end of the third year, what is your balance would have become by this time? 1 lakh exactly. Agree or not? Because what is this total number? 24,869. Correct now. Plus E number also, if I this number also, if I add it, if you see down, exactly you will get 1 lakh. Agree? And that party, other party, whomever we gave the deposit, that lessor will give me back 1 lakh. He will give me back 1 lakh. So deposit account, bank account debit to deposit account. Last day will pass one journal entry. Correct, na? That's all. That's it. So what do you say? This is bank account debit, deposit. Yeah, to deposit. This much. Have you understood? We started with opening, we started with closing with the movement of money. It is like first one, financial liability, loan taken, I have explained. Second situation, financial asset. Correct, na? Right. Deposit given, I have explained. Right. Do you find any difference? No difference because first one loan is a different rate because I have got 5,000 some rate I don't know. Then I will apply Gold-Sig method IRR something will be applicable. But in these circumstances, since you only have discounted at 10 percentage, no other element is there. Do you have any other element of processing fees or that fees, this fees? We don't have any other fees and no other issue is there. Then what should I? Then I don't need to think what rate to apply. No, I want to apply. Tell me, Gold-Sig method will follow, sir. Follow. Gold-Sig also will tell same percentage only. Na? How come that will tell different percentage? You getting my point? Yeah, here market rate only, fair market rate only, EIR rate it will become. You getting my point? Right. Whichever rate you apply will be same rate only will come. I mean to say. Right. Would you like to take down this? Take it. This is financial asset related matter. What will happen to ROUA? ROUA will be taken to ROUA means nothing but PPE. Okay. It will be depreciated over the period. 3 years may it will depreciate. Divided by 3, depreciation expense account debit to ROA, depreciation to ROA. That concept, if you take any building on, first point is what, if you take the building on rent, ROU is also building only. If you take any other asset, like machinery, if you take it, that is also ROU. Fine. First you copy this. Yeah, yeah. Right of use asset, please write. RI. This arises in Ind AS 11. You got into the app, correct? So whatever the class, whatever the PDF or whatever Excel also, no, I'll put it there only. Okay, right. I told you, if I can transfer it in the Telegram. What happens? It will not be like day one, day two. It will not come like that. Correct now. You have to search for it when you are reading the respective one. If I keep like day two, I'm discussing this. There only PPT also. If I keep it there, Excel also. If I keep it there. If you want to go and refer it, yes, study reference will be there for you. That will be useful. But instead of, obviously, your mobile will be changed. Anything can happen. This is safer and better. Handwritten note. Upload will take some time, my dear, all the time. Don't expect before 11:30, because even though video is ready, it has to be upload means it has first you have to reduce the size. It will come in 2 GB, 10 GB. Reduce the size, then it will have. That's what it takes. So I hope you are comfortable with amortized cost so far. Then now I'll take you through FET OCI, FETP. Those two important concepts, if I clear it now, then one basics, important one is done. Okay. I told you debentures are something, right? Are you done? Yeah. Observe. We'll go to ICE AI website. Directly suggested answers. Final. May 25. Financial. Fourth question or yeah, fourth. Here, this area, generally they'll give all that, right. Discuss the limitations of general purpose financial reporting. This is the area where they will ask you all that basic fundamental questions. Question number 5, under question number 5, all the time. It's this time it is not here asset related. Correct now. I'll just take you to suppose November 24. Let me financial report. The question, the theoretical question they will ask. Again, see, explain how enhancing qualitative characteristics that can improve the usefulness of the financial. What is qualitative characteristics of financial statements? Understandability, comparability, timeliness. Okay. Sorry. Relevancy, reliability. That's all. These are the words. That four words, if you write, na, 2 marks will come. For four words, yes, half of mark for each word. Are you getting my? Have you heard me correctly? Half mark for word. If you write understandability and you did not write anything for that, half mark will come. You don't know, assume, not a problem. Understandability you wrote, but you didn't write anything, half mark will come. Got it? That they will not tell here marks. We know it. Got it? Just go down, we'll see. Last one. Offsetting, comparability, verifiability, timeliness, understandability. Timeliness means you have to prepare the financials in time. Correct now. 31st March 25, you will prepare in 31st March 26. What should I do? Correct. Now, what decision you will take? Next year financial statements also going to come. So that's why that time delay, more the delay it happens, then decision, it's the purpose of financial statements for the decision purpose. Right. If you delay it, it's useless. Correct. If you purchase yesterday newspaper today, what is the use? Yesterday newspaper, if you purchase, what do you do now? Getting my point. So today paper you have to buy. That's what timeliness it talks about. Right. In this area, there are 4 marks. That is 4 marks. But again, it is a choice. Optional one is there. But sometimes for a carefulness, no, sir. Correct. If you don't know the above one, but at least some theoretical you know, na, you will get marks. Again, I'm telling you, for headings, if you write also 2 marks will come. Or sometimes 1 mark only they will give. Little more explanation. What is understandability? What is timeliness? What is this? Then full mark will come. Very less number of people write. Little if you elaborate also, you will get full mark. For minimum you will get 3. Out of 4, 3 will come. Okay, don't try to lose that opportunity if you know it. Prefer writing there theoretical only. You will get full mark. That's what I'm telling you. Now, let's get into FETOCI. Okay, right. What is FET full form? You already noted. Fair value through other comprehensive income. This is very simple, Amma. If any item, financial asset only, FETOCI, correct now. Right. You write it here. It is applicable. Right along with me. It is applicable. It is applicable only to financial asset. It is applicable only for financial asset. Intentionally, you write financial liability and cross it. Intentionally, you write it. Financial liability also, you write it and cross it. Okay. So, financial asset, only financial asset. What is this FETOCI? Right. Few instruments are there. Debt instrument, equity instrument. Means financial asset, why I'm talking now. Asset means investment in debt, investment in equity. Right. So let me say investment in debt, investment in debt, investment in equity. Equity. Actually, investment in equity automatically cannot be FETOCI, but it has to be selection. Counting policy choice, it will go. You can go with FETOCI. So you bought, right? We bought it on say one day. Listen, simple, very simple. 1/4/2000, 2025. We purchased. What you purchased? Reliance company shares. Done. At what rate? Somewhere What is the rate? 1500, I think. Correct. No? This is the range. Okay. Say one share only you bought it. Just for simplicity. Fine, one share you bought it. And you have classified FET OCI. You already told. I will go by FET OCI. Then that is choice. Choice. B choice left to the company. Accounting policy choice. Understood? Right. So what is journal entry you record when you buy first time? Investment in, correct na? Investment in RIL, Reliance Company shares, whatever it is. Right. What is the number? 1500. Right. To bank. Then 1500 you will do it. But actually you must have paid some 50 rupees also. Assume some transaction fees or something. 10 rupees you paid extra. Getting my point? Yes, that will be there. This 10 rupees is some transaction fee. Clear? Right. Now on 31st March, if you are going by FET OCI, what are you supposed to do? On 31st March 2026. What is the fair market value? Can you get fair market value from the market directly? Yeah, you can get, assume 1650 is the 1600. Well, let's make it 25, something like that. So fair value through OCI means on the balance sheet date, asset should be at fair value. What did I say? Ah, in the balance sheet, in the balance sheet, financial asset should be at fair market value. So what should be the number exactly? 1625 should be the number. But what is there already? 1510 is there. Correct now. So what is the difference? What is the gain? What is the gain right now, my dear? That is 1625 minus 1510. 115 is the gain. This 115 should go where? OCI. OCI means you should have some name of the reserve or something like revaluation reserve. We have a reserve na? Like that. Here also we will create one name, not a problem. Should be routed through OCI. This should be routed through OCI. Clear? Right. What is the journal entry you record on 31st March? Tell me, my dear. We'll say investment account, investment in Reliance Company account debit. That is going to be 115. Right. You can record your own name. That's not a problem. Investment fluctuation reserve. I'll write, sir. Right. Fluctuation reserve. Your choice. Standard never asks specifically in this. Investment fluctuation reserve 115 करके you will record it. You getting my point? So now under OCI 115 will be presented. Next year it went to 1700. So another 75 has gone up. 75 will be presented in the OCI. Hello, understood? Yes. This is what FET OCI. Sir, okay. 31st May, sir, example. On 1 2026. Okay, right. We received dividend. We received a dividend. How much dividend you received? Sir, 25 rupees I got a dividend. Assume. What do I record? Bank to dividend income or bank to FET OCI? Where should this dividend go? Dividend means P&L or OCI, I mean to say. P&L or OCI? P&L, dividend income is dividend income. Name itself is what, my dear? Tell me. FET OCI full form bolo once again. Tell all of you. Fair value through OCI. Fair value change will be routed through OCI, not dividend or interest. Is it clear? So it is always to P and L. It is always to P and L. It will never be routed through OC. You can write it OCI and you should cross it, not to OCI. Is that clear? Right. Maybe debt instrument is classified as FET OCI. What did I say? Debt instrument is classified as FET OCI. But interest will go to P and L only. Hope you understand. So FET OCI may what? Only fair value changes are routed through. Okay, routed through OCI. That's it. Not dividend or interest. Clear? Same thing. If it is FETPL, what will happen? Tell me FETPL means. Instead of it, reserve placement, what will come? Same example. This will be initial recognition will be same. If it is FVTPL, if it is, what is this, my dear? FVTPL. If it is so, correct na? First entry, will it be different? No, not at all. Same entry will come. Next, have you got a gain? Yes. How much is the gain? 115. But the 115 will be going to where? Yeah. Other income will show it. Will show under other income. Correct now. So what is the journal entry will record, my dear? Yes, this one will be equal to 115, right, to other income. Other income bracket, I'll just keep P and L just for your reference. That's it. No, there's no big difference between FETOCI and FETPL. Are you clear so far? Yeah. Would you like to take or already taken? Just take that. I'm frankly telling you, I am not hiding any information. I mean, I don't want to give half, I'll give half, you come to SS Academy. I'm not telling that way. I want to give freely for the benefit of the student. I want giving 100% free. Okay. I don't want to show sample and then you come and register for us. Not required. MCQ, it's fully given free to everybody, whether you are a qualified or anybody other than qualified. Correct, na? Right. Let them use it. You also should, I'll tell you. Okay, once I do with one standard, I'll tell you should apply. Just it will take half an hour or less than half an hour. Okay, 30 questions are there. 30 questions are 30 MCQs. Immediately after the concept is done, na, how much time does it take? 15 minutes, maybe less than 15 minutes, you can close. Right. If you close it, then you will feel okay, I understood all the concept. Correct. One revision, good revision, conceptual revision, numerical also I kept, I told you. Right. And in our case-based scenarios, that will come little later. It's on the way. Fine. Right. Please share at least one person, one student should share it to one of your friends. Minimum. That is blessing only. That is not a curse. Correct? No? Blessing. Get the blessings. Important. What I'm doing, free of cost, I want to share. Like in SCOG, me also in that small recent one I told you. Take no, I mean they are all qualified, so they are all directors. If you're interested, you can spend. Really want to learn, right? And not written my name also in that. Don't find my name in the MCQ. Nowhere. It just then wanted to do free, free. Can we go ahead? Sir, sorry. Yeah. So these are the some important basics. One more small point is there. Okay. FMV, how do you find out? Fair market value, simply you are telling. Yes, we are telling simply, right? Market value, some cases, no? Right. Listen carefully. This whatever I am telling you, my dear friend, it is Ind AS. I don't want to shift here. That's why I'm writing here only. Okay. Ind AS 113 is fair market value measurement standard, which is the number 113. Remember, you have to remember the numbers. 113 talks about FMV measurement. As part of syllabus, we'll discuss that. That's the second thing. Here, what happens, listen, if you look at in the future financial statements of India's financial statements of any company, level 1, level 2, level 3, something like that, you will find it. What is that you will find? Level 1, level 1, level 2, level 3. Okay. Level 1, level 2, level 3, something like that, you will find it. What is level 1, sir? This is for the FMV measurement. Level 1 means, my dear, directly number I took it from the market. No change. Suppose Reliance share. You don't need to change now. Directly one unit means one share is equal to how much? You will get it. My company has mutual funds. Which mutual fund? Type on it will come. Today, end of the day, whatever is the Huh. Rate that will come exactly. NAV will come. Are you getting my point? Gold rate. Can I get or not? Those are all level one. What is this? Level one. Are you getting my point? Level one means directly from market. Right. No changes. We didn't do any changes. Yeah. We didn't do any changes. It is just directly coming from the market head. So then we call it as level one input. What do we call? Level one input. These are all input. Input for the measurement, basically. What do you mean by level two? Level two means, my dear, we'll take the information from market, but light change will be there. You have to carry because it is not. It is similar to, not exactly. Got my point? It is not exactly same information you did not get. Some bond rate I took. What is your company debenture market rate? Sir, my company market rate. How do I get? Mine is not listed. Mine is not listed. So do I know the value? Just a second. Yeah, sorry, guys. So if you are taking directly from the market, it is called level one. Okay. If you make light change, little, otherwise I'll say little, very little change. What is a little change? I was giving an example, right? There is one company, listed company, debt also listed. What is the debt value today? I can check in the website, correct? Market website, you will get, right? Market value you will get to know. But my company is not listed, sir. And then what should I do? Similar company debt rate, some approximate rate will apply. We'll also do calculation. If the calculation part is very little, then it will be falling under level 2 input. Getting my point? Now, tell me, level 3. Just now, you have done fair market value of the, what is that? Rental deposit. Rental deposit, have you given or not? Yes. Have you initially measured at fair market value only or not? Initially measured. That is level 3 input. Nothing linked actually. Right. It is, you have done the calculation. Major information, most of the, not little change. It is a major change. Major calculation if it is done by an expert. Suppose example, equity share of private limited company, fair market value. What should I do? Is it directly available? So level 1 impossible. Level 2 also, is it possible? I can't take Infosys company, my yesterday born company value, can I compare? I can't compare. You have to do on your own method, net assets basis, that basis, this basis, correct? Revenue model, assets model. So many models are there for calculation of value of equity share. It will fall under level 3 input. Just introduction, this is, my dear. The deep discussion will happen. But whenever I say level 1 means, don't think something level. Level 1 means what? Directly from the market. Have you done any change? No, we didn't touch. What is the example? Right? Listed equity or debt or that mutual fund units. Correct, na? Or bullion, right? Whatever gold, silver, and everything, etc. Directly available from the market. If I don't touch, pick the number and apply it to my company financial instruments. Correct, na? Then that is level 1 disclosure. You should give it. Level 2 means lightest change. Very little input. I know everything is coming from the market, but to adjust it to the market, I need to apply a little bit of the factor required. Then it is called level 2. More adjustment is required. Then it is not level 2. It is going to be level 3. Is that clear? Right. This is important to you. Right. Yes. I have got some 10 minutes of time. 10 minutes of time. I'll take you through the what is asset, what is liability. We'll learn now. Okay. You know it already. Right. You don't need to copy this. Okay. I'll share this. What is that? Slides. I will share it with you. But if you want to copy, you copy at home. Right. Here, asset liability important. No doubt. Is it important? Very much important, my dear. 4 marks also. I asked. Got my point. You don't know that. That's the problem. Yeah. So balance sheet is into how many parts, my dear? Two. Three. Two na three na four. Three. Okay. What are those? That is assets and equity and liability. What is equity and liability difference? Equity means you are not liable to pay to anybody. Simple. Nobody can come and catch your collar. Correct? Na? Hey, pay my money. I mean, other party do not have right. What do I say? Other party do not have right. Correct? I am equity shareholder of Reliance. Can I go and ask Mr. Ambani or board? You have got so much of fund. I have got 0.001 percentage. I have personal need. Pay me. Get lost. When we declare that time, money will come. Correct? Na? That's all. Simple. So what is liability? Liability is something where you have obligation to pay. Means other party has other party has right. You have an obligation. Are you getting my point? Link from our side obligation. Other party has right. Is it clear? Exactly. Now, but with respect to equity, we don't have obligation. No obligation to pay. It's mine, my company's money. Nobody has right. Correct. Na? The day it is declared in the AGM. AGM is declared profit. I mean, dividends are declared. Then what will happen? Other party will get the right. I will get an obligation. Correct. Na? That's why what we will do that day, we move the money from the retained earning to dividend payable. That day it will become equity to liability. It will become. Hello, understood? Huh? What is the entry will pass when you declare the dividend? Retained earnings account debit to dividend payable. Current liability may it will sit. Are you getting my point? Exactly. So owner's fund, right? It is owner's fund. So this from where it is all coming. Correct. All this whatever like asset, liability, equity, income. There are five definitions are given by the. There is a separate document issued by IASB, issued by ICAI, both same dot to dot everything. Correct. Now will not change. ICAI will not change the words of IASB. Not required actually. Correct na? I mean, ignorant, hai to you will tell like we are doing copy paste. What do you mean by copy paste here? Correct na? 2 into 2 is equal to 4. What I told you copied. See, 2 into 2 is correct na? You copied. How can you tell? That is the fact. You know, internationally, at very high level, a big brainstorm will happen, my dear. It will not, one standard will not come just one day discussion. In one day discussion, standards will not come. For India's 109, 3 years it took to come out. Almost 15 or 16 number of meetings at international level happened. Correct, highly knowledgeable and practical experienced people, correct now, even Big Four is also part of it. That all the people discussed at very high level, then came to conclusion, then the standard is released. After that level of international level brainstorm has happened, why should I have again national level brainstorm once again? Not required. So that is the fact. You can blindly also follow because that is fact. You can directly follow it. Okay. So what is asset? Asset is there is a slight change in the definition from what you studied for AS to Ind AS. Ind AS framework is speaking little, but meaning is same obviously end of the day. So what is it? Present economic resource. What is present? Present means what? Now. Now means which? What do you mean by now? It is today, 10th January. Yeah. As on balance sheet date because asset will come where in the balance sheet. So balance sheet is dated which date? 31st March. Correct now. So balance sheet is dated 31st March. So as on that 31st March, it is an economic resource controlled by the entity which is arising from the past events. Okay, right. And economic resource, what do you mean by economic resource? They told economic resource is a right which has the potentiality to get me money. What is economic resource? It is a right. Correct now. This laptop is mine. Yeah, I have a right on this laptop. It's mine, correct? I bought it. So what can I do? I can provide services to my clients. If I want, I can sell it. If I want, I can rent it. I can exchange it with another laptop. Agree or not? I can do whatever I want. It's a right. That right is giving me potential correct. But it has the potentiality to produce the money. Economic benefits means what? Money. So present economic resource. Present means as on balance sheet date. It can be tangible. It can be intangible. Control is the another word. What is the word? Control. I have got control over it. Control does not mean legal ownership, my dear. Correct, na? Right. It should be like control over the future economic benefits. Control. What do you mean by economic benefit? Money. What do you mean by economic benefit? Money, exactly. If you should be getting the money from either by using or by selling or by renting or by exchanging, whatever it is. I'll get either money or money's worth. What do I get? money or money is worth. Correct. Now, how did you get this control, sir? How did you get means I bought it from the market. That's why I got the control. Correct. I did barter. I got control. Correct. Now, I sold goods. That's how I got the right to collect money from the debtor. I provided services to somebody. I got the right to collect the money from somebody. I gave my laptop. I have a right to get either laptop or money from the other party. Well understood. Everywhere it is right. I have intangible asset. Yes, I have a right on the intangible means I will use it, I will sell it, I will do whatever I can do with PB, same thing I can do it the other way around. I hope you understood. So economic benefits means money or money is worth. Right. How do you get economic benefits? Either by selling, using all these words we spoke. So what is the definition? One liner actually. What is the definition of asset? Present economic resource controlled by the entity arising from past event. Can you repeat once again, please? Present economic resource controlled by the entity as a result of one more time also. Right. Present economic resource controlled by the entity arising from past event. What is economic resource? It's a right, correct, which has the potentiality to get money, future economic benefits. Very simple. Okay, when should write? What is the condition to recognize? Recognition means what? Recognize asset will tell. Correct, na? Recognize asset, recognize liability. What do you mean by the word recognize? Recording in the books, not identification. Recording in the books of account. Recording means passing the journal entry, debiting the asset. You're recording in the books debit. When can you record the asset in the books of account? There are two conditions. Control should be there. Yes, no doubt. Correct, na? Right. So there are two conditions. If you satisfy, it is going to sit on the balance sheet asset side. Sir, I did not satisfy one of the condition. Sorry, my dear, you cannot record it. Is it clear? Very, very important. These are the fundamentals. It looks like every standard may link it with this number. Go to PPE, go to investment property, go to intangible, go to in 105, 36, wherever you want to go, we can link it with this definition. That crucial these are. Okay, you have to remember. Why to remember means, okay, when you want to give a justification, correct? If you want to tell me, right? If simply tell no, it's an asset. My boss told us that's why I said. It cannot be that like that. No. If you want to tell in the exam or if you want to speak to another technical person, you should say that it is an asset, my dear. It satisfies both the conditions, first condition, second condition. See, it's satisfying both. That's why it is an asset to me. Are you getting my point? Yes or no? Yes. I have a question afterwards. Let's see whether you will crack this or not. Okay. Think. Right. So first one is what? Probable future economic benefits inflow will come. What will come? Probable future economic benefits inflow. What do you mean by probable? More than 50%. More likely than not called is called probable. Okay. Next one is cost or value that can be measured. See, if I don't know how much I will get, how to record here? When you want to pass a journal entry, number also should be clear. Na? Number only I don't know, then what do you write? Entry only cannot be recorded. So either cost. Cost is, what do you mean by cost? Simple definition. Don't write in exam. Cost is what you lost. Correct? No. It suits perfectly. What you lost is your cost. Right? So that number you should be knowing at least. No, sir, I don't know that. It is fair value. If I give it to somebody, how much I'll get? That at least you will be knowing. Na? Yes or no? You should be knowing reliably. I can calculate it. It's not accurately, reliably. Trustworthy number, not ad hoc number. What did I say? Ad hoc means what? Random number. Simply, how you got? I don't know. That is ad hoc. Okay, right. Probably means I have a small scale here. Okay, I'll directly keep it here, my dear. 0 to 10%, 10 to 50%, 50 to 95, and 100. Okay, probable. Probable means 50 above percentage is called probable. That is called more likely than not is called probable. Okay, possible. One more word is there. Right? That is may or may not. That is 10 to 50% is possible. Getting my point? You are at which level? CA final level. Correct, na? Agree, na? CA final level. If you change probable word to possible, no, result also will be like that. Should not, that's why you, why am I telling seriously? Have to be very careful in using the selecting the words, my dear, because you are at final stage. Correct, na? One step, just one step. You already completed your writing means already completed articleship, right? Whatever it is, it's just a matter of time. One step from the law point of view, you and me both are one and the same. Agree or not? How many I can sign, that many you also can sign. Yes or no? Yes, exactly. FCE equal more, ACE equal less. There is no such concept like FCA will be signing more than 45 signs. We will sign lesser. Nothing like that. No, both of us are same. One step, just one step. Control yourself. Correct, na? Strictly follow the rules and regulations. You will clear. In this small step, may if you neglect, if education career goes to backseat, then don't blame anybody. You should blame you only. Agree? Right. So be listen carefully, and again while writing the language now, when I correct the paper, fine, I expect perfect in the wordings. That's why choose properly terminology. If you choose wrongly, sorry my dear, not accept. Not accept. Probable is probable only, possible is possible only. Probable means above 50 percentage, possible is equal to or less than 50 percentage is possible. Okay, right. What about this 0 to 10 percentage? So 10%, where is it written? Is it there any standard? Show me. Nowhere there. This is our number. Professional judgment number. Seriously, yes. Nowhere it is told. No standard may you will find. Right. 10% is a rough number. Fine. If you say 10% is called remote, we call. What is called? Remote. Remote means what? Rare chance. Okay. Right. Next. 95 percentage or 95% also do you know? No. No, that is also rough calculation. 50 only correct number. 0, 50, 100 is perfect number. That's all. Nothing else is perfect. Understood? 10 and 95 is rough numbers, judgments numbers. Okay, just to make you understand as a student. Fine. So 95% is called what? Virtual certainty. Certainty means what? Pakka. Virtual certainty. Pakka. Guaranteed. That is called virtual certainty. Hello, is it clear? So how many conditions, my dear friends? To, to recognize an asset, two conditions. What are those? All of you please participate. Probable future economic benefits inflow, cost or value should be measured reliably. Value can be fair value can be NRV, value can be replacement cost, it can be anything. Just value will go by value word. Is it clear? Right. Now, next thing. Are these assets? First question. Primary expenditure, is it an asset? Fictitious asset, deferred asset, any new name you want to bring. I incurred primary expenses. 1 lakh rupees I paid. Primary expense means incorporation expenses. Right. Shall I charge it to P&L or shall I capitalize it? Capitalize it. Why? Does it satisfy both the conditions here? How? You made the payment, so you know the cost. Second condition, you got it. How do you get the benefit? How do you get the benefit out of registration? Today I registered my company. 1 lakh I paid it to one qualified person. He gave me one piece of paper called incorporation certificate. You will put a frame and put it somewhere. Correct na? Reception mein dal do. Right now tell me, how do you get economic benefits from that paper? Money will come from the business what you do, not from the paper. Agree? You open company, you didn't do any business. Money will come. Can you sell this paper to somebody? What will he do with it? Agree? Money will come from where? Business, not from the incorporation. Agree or not? Incorporation is a professional expense, my dear. Somebody, I asked some professional, "Hey, boss, incorporate karo." Sir, he did the incorporation. Correct. He did the incorporation, and that is an expenditure. It has to be charged to profit and loss statement. That's it. It cannot be an asset. Hope you understand. Right. Next, advertisement expenditure. Tell me, huge advertisement I spent. IPL is happening in April. Assume March I paid. Or March only IPL is happening. Correct? No? Yes or no? Don't know only. Very good students here you are. Right. So March happens, right? March IPL is happening. We spent huge money, 10 crores or 100 crores of advertisement we did in IPL, expecting we'll get the future economic benefit. My sales will happen in the April, May, June next year. I'm just improvising my brand. I mean to say other way around. Agree? 100 crore expense I spent in March. Tell me, shall I hit the P&L or shall I take it to balance sheet? Asset or P&L? P&L, sure, all of you. Asset. Why asset, ma? Future you may generate, you probably generate. Because actually you use the word may, that's why I had doubt. Probable. Based on the market research, probable. You know, yesterday when cinema has come, Raja Saab. Okay. One Telugu movie has come, Raja Saab. Who acted? Prabhas. Correct na? But cinema, that's correct. It may be Prabhas or it may be Mr. Rajinikanth or Amitabh Bachchan. When cinema में content नहीं है तो nobody fool. Correct. Yeah. Understood. So advertisement can fool you one time. Agree? Right. But that 400 also has become because of fans. Abba. Fans is equal to fools. Then fine. Right. Listen, seriously, na. You have seen many movies. Maybe the top actor, maybe content is not good. Actor, we don't have any problems with actors. Correct, na. Content is not good. Then gone. Correct. Na. At the same time, you have seen other side also. The faces are very new, fresh face. I mean, nobody has seen them first time, but the content is super, super hit. They must have spent 110 crores. They must have got 100 crores. Something like that. Just example I'm telling. There are so many things like that. Just because you advertise, agree or not? So Virat Kohli only will come and open one Jai Luka shop here. Okay. Otherwise, his opening ceremony, we spent a lot of money to Virat Kohli or any other cricket star or cinema star, somebody ko we paid money. Correct? Right. Suppose now you are in need of, now you suppose some function is there, you want to purchase some gold. Will you go to that shop? Actually, next to that shop, one more shop is there, Lalita Jewelers. Got it? He's offering at a cheaper rate. Will you go to this shop or that shop? Correct. Now you may be fan of Virat Kohli, but doesn't matter. But because of Virat Kohli, there is one great advantage. What is the advantage? No, when that superstar or cricket star when he comes, na, maybe in one shot, may entire Bangalore will get to know there is one shop in Jayanagara, Jai Lucas. If they only open, nobody knows because of one star comes, na, the one shot may advertisement reach will be there. But reach way doesn't mean that all will come to our place. That depends on subsequent things. So advertisement expenditure is possible income can come, but not probable income. I hope you understood. It create awareness about the product. There is one product in the market like that. One awareness will come for sure. Yes, I agree with you. But sales are possible but not probable. Advertisement may be one factor, but not the only factor for the sale. Correct? You can fool me one time, not second time even. So second time also maximum you can do, not third time. Third time also you can fool me. I'm mental first. Obviously, no. Otherwise, how can you fool? Same situation you can give, and you can't fool anybody for longer time. Understand? That's all. So any product launch or opening ceremony expenses, nothing will go to balance sheet. It is also expenditure. Same explanation will work here. Are you getting my point? Let me finish asset at least. Okay. Right. Training expenditure. Tell me. We trained our employees. Huge money spent. Expense or asset? Expense or asset? Online people are sleeping. You can also answer. Huh? Expense or what is that? Why expense? First of all, employee go can you control? Today he'll take training. After training, he'll put the paper. Then now what can you do? But there can be a circumstance, correct? Now, there can be a circumstance where you have taken a bond. Like, say, example, pilot training. It involves a lot of money, lakhs and lakhs or near to crore. It will depends on training to training. When I'm investing 1 crore rupees on one particular person, Mr. X, why will I spend? I must have taken a bond. My dear, you have to work with me for 3 years. If there is a bond, asset. If there is no bond, then it is obviously expenditure. It depends upon, do you have a control over the party, employee? If you have control, whatever the mean, correct na, then it is asset. I hope you understood. It depends basically. Right. Self-generated asset, goodwill, brand, publishing title. Correct na? My book is a title. India's Made Easy is a title. Who created? I only created. Can it become an intangible asset in my balance sheet? How do you satisfy two conditions? Condition number one, probable future economic benefits inflow. It will come. No doubt. I don't have a problem. But second, how much is your cost? You cannot determine. Goodwill value, nobody can determine. Goodwill value, nobody can determine. The problem with goodwill, na, if you want to buy Tata company, example, can you buy Tata company goodwill alone? Possible, no? It will come along with the Tata company. Goodwill alone cannot come. Sir, brand can come. Brand also, value cannot measure it exactly. Till the time, correct na? Till the time I sell it, you buy it, no. Till the time, nobody knows. Nobody knows, seriously. Because everybody will tell my brand value is equal to 1,000 crores, 10,000 crores. Why, when they're selling maybe 10 or 20 cut. It can happen on both the sides. It all depends upon, it is because it's unique product. Every person, correct. A Nike brand is Nike brand. Is there any comparative for that? No, brands are intangible. Most of the intangibles are unique. Most of the intangibles are unique. That's all. So you cannot measure it. So my dear, self-generated brand is not asset. Reason, I can't measure it. Correct now. I cannot measure it reliably. That's why it doesn't satisfy my second condition. That's why I'm taking it this way. Right. One small answer like this simple. Building, you bought it, amount you paid, got the possession by 15th March. You got the keys also. Okay, but registration. We went to register office on 5th April and you got it done. We were waiting for one good day, nothing wrong. But that is after 31st March, this is before 31st March. Now, can I take the asset into my books of account? Yeah, why not? Correct. Now, registration is a procedural task. That is a security. For the buyer, it is a security. That's why we'll go and register. Register means what? We'll go to government books, we'll enter our details. That's all. So earlier, this guy is owner. Now I am the owner. You are entering the data into government books. Books. That's it. Nothing else. Registration. It's a procedural thing. You can just forget about it. Research expense, you know already. Correct. Research expenditure, you will be always charged to P&L. Why? Cost, I know how much I spend for research. But do you have probable future economic benefits? Research is a innovation, Amma. Research is what? Innovation, God only knows. Correct. Na? If you remember for COVID time also, first everybody told the vaccine impossible. Karke. Have you heard this? Vaccine is impossible because so many mutations are there. That is some technical words they were using. Correct. Na? Subsequently, within 6 months or 9 months, so many vaccines have come. Actually, the person who is trying to do that person also don't know whether it will happen or not. Even if it happens, will it work or not? Even if it works, will it give money or not? So many problems because it is a finance accounts. End of the day, money should fetch. Whether money will come, do not come, that you cannot talk at the research stage. I hope you understood. So that's why this is going to be, right? What did I say? It has to be expensed down. Done? Hello. So we'll see the remaining maybe another 15-20 minutes. I need to list liability income. One view, that's sufficient. Fine. If you want to, I'll share it in 15-20 minutes. At least you say by 11:30, 12, it will happen. Right? You can take it from the app directly. So at least you will also be habituated to that. Then see you tomorrow. Tomorrow timing, same timing will work now. Day. So metro problem. How many of you